144 basis points, which is the largest margin of winning versus treasuries since 2015.
Does
so
that
really
continue?
a feel-good story.
Eric, can that continue?
Absolutely. So really the biggest things I think that are going on in our market are softer supply coming in and just really a palpable fear of taxes. People think tax rates are going to go higher. That leaves munis as one of the only games in town.
Yeah, I mean, I'm just looking at a Bloomberg News story. Biden will push higher taxes for the rich in State of the Union. That's got to be
I'm so
good for
surprised.
flows.
What?
Yeah,
What's the?
exactly.
Was somebody give me a definition of what rich is?
Yeah, I don't know what rich is.
Depends on, well, as we learned, you get into that 1% in Monaco, you got to get like 12 mil
Yep,
or something
that's right,
like that
that's
for your
right.
net
Yeah,
worth.
It's
So
all
it just
relative,
depends.
John. You're rich in spirit, John, so you got that going for you. So talk to us, Eric, about, again, taxes go up. That's got to be good for flows for munis.
Yeah, I really do think that that's probably going to be the thing that sort of tips fund flows to really start coming in. On the mutual fund side, we're still seeing positive flows coming in on the ETF and separately managed account side because of cost, and people are being cost mindful. But I think that if we, either have higher corporate tax rates go up, and that bleeds into higher prices and inflation keeps going, it's going to keep the Fed on pause even longer, and eventually they're going to have to raise federal taxes.
So if they don't, though, let's just gain that out. Is the reverse true? Like if taxes don't go higher, do munis make less of a good investment versus the flip side?
No, let's just say that, we have a Trump, win in the election and we have an extension of Tax Cuts and Jobs Act provisions, right? We already know what's going to happen from a tax standpoint. We're living in it right now. And muni demand is fairly strong, I would say. And on a tax equivalent yield basis, they make a lot of sense still, especially where tax rates are.
All right, so talk to us just about some of the new issue market. How does that look these days?
Pretty robust. Look, we look at a website, MuniOS, to sort of get a sense of what's coming into the market. And there's probably been upwards of 10 billion in new deals added to their preliminary calendar over the last week, which is definitely what we want to see. Is the market primed to absorb that much volume? I guess we're going to find out, and we're hoping that the demand side is still there. I think it will be.
I mean, we've seen definitely a lot of takedown for the auctions for the Treasury market, so clearly there is demand. Here's a weird question. Aside from the tax point, is it a price appreciation play if you buy munis, or is it a yield play? Because it does feel like that conversation is kind of starting to trickle out a little bit within the bond market.
Yeah. I think definitely for our market, I would say more of the conversation should be held around carry and how much you're actually paying to get that tax-exempt income.
All right, so talk to us about some of the, are there any concerns out there in the muni space? Anything that's blown up recently? Because I haven't seen really much of anything about. We haven't seen anything out of the Illinois of the world, the Puerto Ricos of the world recently.
Yeah, it's really a slow burn. And I think the things that are going to be a more meaningful story, let's say 10 months from now, a year from now, are really going to be surrounding commercial real estate valuations and how a lot of these cities and states are going to fare once they're totally off of the COVID stimulus funds. And that is quickly coming to an end for a lot of places. We're seeing a big uptick in local news stories talking about budget deficits for school districts. And I think that's really sort of the canary in the coal mine as far as where municipal credit might be a year from now.
And then we have all these like natural disasters, right? We have like Texas on fire. I don't actually know why that's happening, but then there's a life-threatening blizzard apparently that's going to slam California this weekend.
12 feet.
I mean, they're not built. What?
Go to the webcam
for
the Truckee Airport, the live webcam. It's like breathtaking, the amount of snow they're getting.
I mean, but they're not set for that, right? Like if we get 12 inches, that stinks, and maybe we shut down for about a couple days or whatever, but you can manage it. California, definitely not. Do these kind of disasters lead to more issuance? How does that affect states?
Yeah, so I mean, it's really a twofold argument, right? You're talking about a one-off disaster like a wildfire, right? As opposed to more of a climate change nuance conversation. So I think on the climate change conversation, yes, over time, that should lead to more issuance as cities like Miami want to invest in seawalls or sort of water mitigation issues, especially like New York as well, right? Same sort of thing. When we talk about one-off issues, such as like a hurricane or a wildfire, I think we can just point to the resilience in municipal credit and say that we've never seen a default or a decline in credit quality come from a natural disaster. So, until we see it, I can't really say for certain that we're going to see something happen like that.
All right, Eric, in a related story, we were talking about Citi pulling out of municipal bond market, which I think is just, I understand Jane Fraser's got to goose returns, but getting out of, when I think of municipal bond market, I think Citi is one of the leadership. In any case, they shut that thing down. Truist which is a southeastern bank formed by the merger of SunTrust Banks and BB&T in 2019, and said, hey, let's call ourselves Truist. That makes sense. Anyway, they're hiring a bunch of these city municipal bankers. Yeah. That seems like a good deal.
Yeah, absolutely. Look, I'd love to see it, right? You want to see these guys quickly get off the sidelines and back into the banking world, right? And build that pipeline of deals coming into our market. You know, I think there was a lot of chatter right after Citi announced that they were leaving the business, that there was going to be this liquidity void and what's going to happen with supply. And look, we've seen nothing but a bunch of articles talking about how all these Citi bankers were snapped right up and Citi traders going to different shops. So I think everything is going to be fine in our market. I really do.
Yep. All right, Eric. Always good to chat with you. Eric Kozatsky, Senior Municipal Strategist, Bloomberg Intelligence, via Zoom from Princeton, New Jersey. And John Tucker mentioned this Truckee Airport cam. I've got it up and running here. And the snow's coming down. And the snow plows are out there like going nuts. But it seems like every time they go down and clear part of the
who's going
runway,
to land at that airport in a wicked snowstorm?
I mean, that is really bad.
I mean, they plan an airport. I mean, I don't know what the elevation of this thing is. It's got to be around 10,000 feet up there. It's just extraordinary.
I will tell you that was one of the most frightening experiences I've ever had. I drove from Reno up to Lake Tahoe. It was beautiful in Reno. I get up on 80 in the Sierras and a snowstorm like I've never seen before. Thankfully, I made it, but there was a time that I just didn't think I was going to make it.
I'll tell you, it is. I used to ski there a lot at Squaw Valley, which I don't know if they renamed it here, but Squaw Valley right there in Tahoe and coming up from Carmel, California, you go from sea level to 10,000 feet in like 40 miles. So you just kind of go up on Route 80, and it's like crazy hills. So they have chains. You have to have chains. You pull off on the side of the road. You rent chains. If you don't have them, they'll rent you chains, and you get them. And they won't let you go any further without chains.
But that's my point is that they know how to deal with that. Like, you might not, but they do. Yeah. How many snowplows are in California?
A gajillion. No, up there in the mountains, they really know how to take care of it.
Okay, they do.
They do.
Okay, but what about like San Francisco or like LA?
Well, they just dump on rain. They get the rain.
So they're not gonna get the snowstorm.
No, the snow's only up in the mountains, only up in the Sierra Nevada.
When the Pacific moist air comes off the Pacific, hits the mountains, it goes way up, and as soon as it hits the peaks, it turns into precipitation in the form of snow.
So the way the forecast is there for the locals is, where is the snow line? 2,000 feet, 3,000 feet, 5,000 feet? That's kind of what you look for, and you need to say, oh, I live at 2,000 feet. I'm going to be okay. It's just going to be rain.
Because I'm thinking like you're in LA on a beach, and all of a sudden there's 12 feet of snow. Like that's not the thing.
Yeah, it doesn't snow in LA.
Okay, well that makes me feel a little better. Because I was going to be like, that was some serious climate change.
You disclosed, you've not been to Los Angeles before, have you? Or you?
Have I? It's been to San Francisco.
You have to think about that?
Have I?
I mean, now you've been to Houston a lot to see your
I've been into Houston
people.
a lot. Also, I gotta be honest, I hate the flight. Like, going there is fine, but coming back, that stupid red eye, the overnight, forget
you don't
it.
do red. I haven't done a red eye since I was like 24. It's in my
no,
contract.
Not
and
doing
no
it.
red eyes.
Not doing it. Paul's a contract. That's because he's fancy. I think
S&P 500 up 0.3%. The Dow Jones absolutely unchanged here. NASDAQ up about 0.6%. So just a kind of a quiet day here at the index level. S&P and Bitcoin, it is now trading a little bit lower, 61,400. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, John, former President Donald Trump is in a Florida courtroom today for a hearing in the classified documents case. The special counsel is proposing a new July date for the trial. Trump's lawyers argue the case should be dismissed, claiming presidential immunity. It's an argument the Supreme Court may decide this spring in Trump's federal election interference case. The border is quickly replacing the economy as the most important issue for American voters. Bloomberg's Ed Baxter reports the presumed presidential candidates are paying attention.
Both President Joe Biden and Donald Trump visiting the border, two different locations and both blaming each other. Trump at Eagles Pass.
People from places unknown, from countries unknown, who don't speak languages. We have languages coming into our country. We have nobody that even speaks those languages. They're truly foreign languages. Nobody speaks them.
Biden at Brownsville.
Folks, on my first day as president, I introduced a bill I sent to Congress, a comprehensive plan to fix the broken immigration system and to secure the border. But no action was taken.
Trump calling it a Biden invasion. Biden saying the Congress and Republicans must act. Ed Baxter, Bloomberg Radio.
Russian opposition leader Alexei Navalny's funeral took place today in Moscow amid a heavy police presence. President Biden and European leaders blame Vladimir Putin for Navalny's death in a remote Arctic prison. The Senate passing another temporary measure last night to keep the government running and avoid a partial shutdown. Senate Majority Leader Chuck Schumer.
What we have done today has overcome the opposition of the MAGA hard right and gives us a formula for completing the appropriations process in a way that does not shut down the government and capitulate to extremists.
To keep some parts of the government open until March 8th and the rest through March 22nd. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the gel razor, and today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I want it to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Right now, the major stock averages, they are higher. S&P 500 adding to its record close from yesterday. In the lead for the S&P 500 shares of NetApp, they're up 23.5% right now. Traders also sifting through the latest remarks from a bunch of Fed speakers. Chris Waller is saying he'd like the central bank to boost its share of short-term treasuries. So that has helped push the more policy-reactive two-year yield 6 basis points lower. Right now, we're at 4.55. Avery Sheffield of Rockefeller & Company on the program earlier today worries that stock valuations may be stretched.
With the NASDAQ 29 times, with S&P, nearly 21 times, with real rates, the highest they've been since the GFC, there's a lot priced in, and so I think what it means is that when expectations aren't met, the downside can be very meaningful.
Right now, the S&P 500 20 points higher. It's a record, 0.4% higher, 5117 on the index. The Dow's up 15 points. NASDAQ 100 keeps on this pace. It's going to be another record there. That is up 147 points, 0.8% higher. Just to recap the top story, Boeing in discussions to acquire Spirit Aerosystems Holdings. That's the contractor that makes the fuselages. Boeing shares down 1%. Spirit is up right now close to 16%. And New York Community Bancorp shares, also one of the standouts today, they are down another 25 to 26%. They discovered material weakness in how they track loan risks, writing down the value of companies acquired years ago and replacing the leadership. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. So to another company we go, HP Enterprise. So basically, HP does the computer stuff, and HP Enterprise does the software stuff, if I just break it down like that. They have a little bit of AI exposure, but they're really exposed to IT and networking demand. So the stock did some interesting things. Reported earnings, it disappointed the street. It opened much lower. It had a big gap down from yesterday's close, but now it's up by about 1.8%. And this is why we love Bloomberg Intelligence, because we can call up these guys and say, what's going on with this stock? Explain it to me, please. And that's exactly what we're going to do with Woo Jin Ho, Bloomberg Intelligence Senior Technology Analyst. This is so weird because Wells Fargo also downgraded the stock and the stock's up. Well, what's going on here?
Yeah, hey, Alex. Thanks for having me on. So I think that a lot of the bad news was baked into expectations. If you look at the forward PE, it's at 8 times. That's bumping closer to the bottom, right? So heading into the print, I think people were expecting that the networking business was going to be weak and down. It was no big secret, especially given how poorly Cisco has done. And that's exactly what HPE did. I think what's happening, though, is that people are starting to get a little bit more optimistic on their traditional server and storage business, and they're anticipating a strong second half growth. That number one, and then number two, preservation of their EPS on the low end. So they're happy with that as well.
Earlier this morning, Tom Keene and I spoke to Antonio Neri, the CEO of HPE. He seemed pretty positive on the outlook here. How are you and the street thinking about this company's prospect over the next 12 to 18 months?
Sure. Let's move past the HPE and what Antonio said. There are a couple of data points that kept us late last night. Dell actually had some favorable server. They expect server growth. NetApp, which is a peer, they're expecting some stability as well as growth in their storage business. And then just the other day, Pure Storage is starting to pick things up as well on demand. So, there's some green shoots of recovery for the traditional business. And then add to that, you start sprinkling in some of that AI pixie dust to help complement some of that growth.
I should point out that Woo Jin Ho is also the guy that both Paul and I would email and be like, hey, we got the CEO of HPE on. What do I ask him?
Yeah, thank you for that.
Yeah, thanks for those questions, because we also interviewed him for TV. We appreciate that. So you say the AI pixie dust. Does that imply that like it's not a real thing, or it's just not real in terms of material revenue yet? What does that mean?
Well, it's still fairly well. To be fair, HPE had a very long history of supercomputer business with Cray. What you are starting to see is that the enterprises are starting to pick up demand on the AI front of sales, right? There was one big deal that slipped out in the first quarter, which disappointed, but we should start seeing more deal flow and deal activity coming into HPE's AI businesses going over the next couple of quarters, especially in the second half. And there's a couple of things that are going to help drive that. Greater availability of GPUs, and that's been the big bottleneck on the AI server sales, not only for HPE, but also for someone like a Supermicro, which is a mid-cap server name, as well as Dell, right? They probably could have had better guidance if Dell in particular would have better guidance if there was greater availability of the GPUs.
So you mentioned Dell here, Wooj. I'm looking at the stock is up, about 27% today. And what that tells me for a company with an 85 billion market cap company is a lot of people like me woke up today and saying, oh yeah, Dell's exposed to this AI spending cycle with all their servers. I wasn't really aware of it. I kind of thought of Dell as a PC company, but they have also got this server business. Why is the stock up 27% today?
So 2 words. Triple tailwinds.
Triple tailwinds.
Right? Okay.
Right. So the PC recovery cycle is starting and should better materialize in the second half of this year. You have the server, the enterprise IT spending start to pick things up. So modest growth on their server and storage business as well, as we discussed with HPE. But also you have roughly $3 billion in AI server sales in 2020, fiscal 25 or calendar 24. That's up from roughly zero in fiscal last year. So you have $3 billion in incremental sales that they didn't have, and that momentum is going to continue into 25 and 26. So there's a lot of excitement around AI servers.
I mean, yeah, I feel like that's definitely an understatement. It's just a matter of like how you wind up playing it. So in a weird way, like is HPE a good play because they haven't been able to deliver the kind of numbers that its peers have?
Yeah, so if everything starts working together, right? Let's say the networking business starts getting back on track, then the server business starts to get on track, then you could really start seeing the benefits of the AI business positively affecting the valuation multiples going forward, right? And then on top of that, you got this Juniper deal that they're going to close at the end of this calendar year, and networking valuations are typically higher than traditional hardware valuations, let's say 13 to 15 times versus 8 times. So, I think investors may be looking at the valuation right now, and it's a value company, and they may be taking a flyer at HPE, especially given that a lot of bad news is baked in.
All right, Wooj, thanks so much for joining us. Woo Jin Ho covers a lot of the technology stocks for Bloomberg Intelligence, part of that great tech team we have at Bloomberg Intelligence. I'm looking at Rich Go, R-I-C-H. Michael Dell started the day number 15 on the list in terms of the wealthiest folks out there. 90.6 billion. He's going to go up a few slots today because his stock, of which he's a very large shareholder, is going to be up, probably looks like it's up in the mid-20s right now. So he'll vault up into the, somewhere in the high single digits from 15.
But still, I look at Rich Go and I look at everybody except for number 3, Bernard Arnault. It's all tech.
It's all tech.
I mean, they probably own other stuff. I guess Warren Buffett.
And one of the names that really jumps out at me is Steve Ballmer. He is number 6, $142.9 billion. he is basically right in line with Bill Gates. Now, Bill Gates has been a net seller of Microsoft stock over the decades, funding his philanthropy and so on and so forth. Steve Ballmer, not so much. Not a big seller. He's just held on to it, and he said, boy, this was a good investment now. I mean, Steve Ballmer hasn't worked at Microsoft for a couple of decades, but he's basically held on to his stock and has just kind of ridden it right up. So he is number 6 in the world. And, oh, by the way, he's up $12 billion just this year to date. So good for him and his Los Angeles Clippers. That's why he can afford to build a new arena in Los Angeles.
There you go.
$2 billion or something crazy like that. So good for him. We'll have more coming up. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company news. Let's start off with Elon Musk suing OpenAI and its chief executive officer, Sam Altman. He alleges they violated the artificial intelligence startup founding mission by putting profit ahead of benefiting humanity. The billionaire is also, of course, co-founder of Tesla and of OpenAI. No longer has a stake, though, but he says in the lawsuit filed late yesterday in San Francisco, the company's close relationship with Microsoft has pretty much undermined the original mission of creating an open source technology that wouldn't be subject to corporate priorities. Musk has been among the most outspoken critic of the dangers of artificial intelligence. This just broke a little while ago. CVS Health and Walgreens Boots Alliance, they plan to start selling the abortion pill mifepristone to patients with a prescription in certain states. CVS saying in a statement that the drug is going to be available in Massachusetts and Rhode Island in the weeks ahead. The company will then expand to additional states where allowed by law. Walgreens saying it's beginning to dispense mifepristone in a phased rollout starting in select locations in New York, in California, Pennsylvania, Massachusetts, and Illinois. And this is from the Journal, and I like to quote Ferris Bueller, who once said, "If you have the means, I highly recommend it."
That is such a great one.
This is a Swiss, not really company news, but a Swiss chalet-style mansion in Aspen has sold for $37 million. The seller, Bob Olson, chief executive of California-based R.D. Olson Development. It didn't say who the buyer was. Not anything like the ski chalets I stay in.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. I'm Alex Steele alongside Paul Sweeney. You're listening to Bloomberg Intelligence Radio. We have all our analysts covering 2,000 companies in 130 industries worldwide. We want to get you caught up now on world and national news with Michael Barr.
Thank you very much, Alex. Paul, John, thousands turned out today in Moscow as funeral services took place for Russian opposition leader Alexei Navalny. He died mysteriously last month in a Russian prison. Bloomberg's Henry Mayer covers the Russian government from Dubai and has more.
The Kremlin spokesman Dmitry Peskov warned earlier today against any unsanctioned gatherings and said that the authorities would take action under the law. We've not seen any reports yet of any arrests. I mean, the police presence was very heavy at the event. Riot police were there in quite large numbers, but so far they appear to have taken the decision just to allow it to proceed.
Bloomberg's Henry Mayer. There are conflicting stories about yesterday's events leading up to the deaths of more than 100 Palestinians. The Associated Press reports, according to health officials in northern Gaza, witnesses say Israeli soldiers guarding an aid convoy in Gaza City opened fire on Palestinians racing to pull food off the trucks. Israel says many of the victims were run over by the trucks and that troops only opened fire when they felt endangered by the crowd. IDF spokesman Peter Lerner.
A large amount of people were going on the trucks and looting them and trampling and crushing one another. And indeed, many of the people that were injured or wounded or even killed were as a result of the truck movement.
Press Secretary, Air Force Major General Pat Ryder says the Defense Department has repeatedly stressed to Israel the need to minimize civilian casualties.
We're going to continue to work with partners in the region to try to ensure that humanitarian assistance can be delivered, while at the same time communicating with our Israeli partners the importance of taking civilian safety into account.
Major General Ryder says the White House is asking for an investigation. The Senate passing another temporary measure last night to keep the government running and avoiding a partial shutdown. It keeps some parts of the government open until March 8th and the rest through March 22nd. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
Hey, Michael Barr, thank you so much. We appreciate it. Alex, it's going to be a big weekend on the Jersey Shore this week, and particularly for those of Irish descent. The St. Patrick's Day Parade will be held this Sunday, March 3rd, in Belmar, New Jersey. Big.
Now, okay, just back it up. Isn't that in 2 weeks?
It's in 2 weeks.
Okay, so I literally don't understand. There's going to be celebrations 2 weeks ahead of time?
But it gives you the opportunity to celebrate not one, but two, maybe three or four St. Patrick's Day parade-y things.
So how big a deal, like what happens?
It's huge.
It's huge. People from all over the region come in, and there's
region
tends to be a high concentration of Irish Americans in that part of the world, and it just has become such a big, fun parade that towns from all over will send their firefighters and their EMT and their trucks and all that kind of fun stuff.
But they also send those because of all the people that are drinking in bars 24 hours.
Probably.
Now, to be clear, you don't have to drink to have a good... What the hell am I saying? Stop me, Paul.
Look at John Tucker over there. So no, it's a big deal. And
take the train.
Take the train.
Certainly not drive. Or Paul's going to do. He's going to ride his bicycle.
The next town
ride
over.
your bike?
Because he lives down there.
Yeah.
You're going to ride your bike. Yep. You're going to do the thing. You're Irish, right?
Yeah.
So you have to.
Are you actually marching? Are you on a float? The Bloomberg float?
Oh my gosh! Can we do that?
The Bloomberg float. That's a good idea.
Bloomberg Intelligence float.
Yeah. Let me make
I'll
a phone
come for
call
that.
here. I think I know a guy. guy. So we'll see how it goes. It'll be fun. The weather's supposed to be decent, but the St. Patrick's Day celebrations, you can't start too early, is what Belmar is.
I'm still just amazed. Like 2 weeks early, here's an excuse to drink. So did they dye the beer green and stuff, or we don't do that?
At the end of there's no drinking in the parade per se.
Sure.
At the end of the parade, you kind of end in the town of Belmar.
Right.
And there's some great establishments in the town of Belmar that people like to go.
And it's a huge boost for the local small businesses there. So,
Okay, I'm not gonna. Okay, well, clearly now I have to support it because I like me some small
yes,
businesses.
that's it.
So now
that's
I
your
can't
excuse.
now I can't make fun of it or anything
No, you
for
can't make
celebrating
fun
it
of
2 weeks early.
That's
Green
where
beer.
we'll be.
Let's do
So
it.
hopefully you guys all have a good weekend. That's what'll be happening on the Jersey Shore. Balance of Power with Joe Matthew. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The government will not shut down today, but that's about all I can tell you. Welcome to the fastest show in politics as lawmakers head home after passing a 2-week extension to avoid a shutdown today, leaving big questions about the budget, funding for Ukraine and Israel, and Washington's ability to function. We'll be joined ahead by Bloomberg's White House correspondent, Michelle Jamrisco from the North Lawn with a live report and analysis this hour from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. And later this hour, a special conversation with retired Army General Ben Hodges. The former commanding general, U.S. Army Europe, is with us in studio with an eye on Ukraine. And as always, we've got a lot to talk about. We start, as ever, with a look at Wall Street. We get to trading right now in New York with Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Indeed, I got plenty to talk about. Right now, we are on track for another winning week for the U.S. stock market with the Dow, the S&P, NASDAQ, all advancing right now. S&P very close to session highs. Bonds climbed as disappointing factory data and a decline in consumer sentiment solidified bets on interest rate cuts. Right now, we've got the 10-year yielding 4.21% with a 2-year at 4.55%. The Dow, the S&P, NASDAQ, all very much in the green. S&P up 21 right now. We are trading above 5,100, 51.18, up 0.4%. Dow Industrials up by 30 points now, up 0.1%. NASDAQ, the composite index, up 104, up 0.7%. Spot gold up $37 the ounce now to $2,081 for gold. That is a gain of 1.8%. Crude oil now with an $80 handle. WTI at 80.67, up by 3.1%. Sources tell Bloomberg Boeing is in discussions to acquire Spirit Aerosystems Holdings, its struggling former unit at the center of numerous quality issues affecting 737 MAX jets. George Ferguson is a senior aerospace analyst with Bloomberg Intelligence.
They used to own Spirit, not as it looks exactly now, but they used to own, those facilities. It makes a majority of the 737 fuselage. It makes the front portion of the 787, two extremely important products. I think they've looked inside and they said, we can't control quality well enough from the outside. We've got to buy this thing.
Ferguson was interviewed last hour on Bloomberg Intelligence. Right now, we got Boeing shares down 1.4%. Spirit Aerosystems is surging 10.5%. Again, recapping stocks higher. S&P 500 index up now by 21 points, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you. Welcome to the Friday edition of Balance of Power. You made it to the threshold of the weekend. And we're not going to be wondering all weekend about what happens with a continuing resolution because they passed one. Let's just get that right off the top here. After we spoke yesterday, the House voted and the Senate got its job done late last night or late in the day so everybody could get on an airplane and get out of town. A 24-hour work week after a 2-week recess. And what we got for ourselves is a 2-week reprieve. So we'll be talking about this again when we come back next week, just as the president is winding up for his State of the Union address. That's next Thursday, following Super Tuesday. So this is going to be quite something next week with a lot going on and testimony from Jay Powell sandwiched in between. Now, by the way, with the way this works, we could be talking about the beginning of a shutdown a week from today. That's how much time we got in our laddered CR here. So it's the 8th and the 22nd we're looking at. And if you're not confused, you're better than I am. So Joe Biden's back from the border. And as he puts the finishing touches on a State of the Union address that, as I read on the terminal, is expected to call for higher taxes on the wealthy, more relief for the working class, it is unclear if he will be able to tout a ceasefire in Israel. Remember, that was the hope. As he said, hopefully by Monday we'll have this done. And that doesn't mean that it can't happen by Thursday. But with what's happening on the ground right now in Israel, there are a lot of questions about that. And that's where we start in a very busy day here on the North Lawn of the White House with Bloomberg's Michelle Jamrisco, who is covering the White House for us today as the Italian Prime Minister visits, just for an added layer of complexity in our geopolitical soup. Michelle, the president's got a lot to think about as he sits down with the Italian PM, and I suspect that Ukraine will be the top of the conversation. What can you tell us?
That's right, Joe, and TGIF did a wild week. That 24-hour work week sounded really good to us there.
You've done that today alone.
That's right. Let's talk about what the Italian Prime Minister might be speaking with Biden about today. Yes, you mentioned Ukraine funding. I'm sure you'll hear a lot about that from the general later this hour. We're bound to hear more about that today from the White House, from Karine Jean-Pierre, and from John Kirby, who will brief later today. But it'll be the same message that Ukraine urgently needs more resources. Italy and the U.S. both probably talking about more ways to find more funding, more resources to get to Ukraine in their defense against Russia at a critical time, just past the 2-year mark in that war. The other big issue that we expect might come up today is just counter China, competing with China efforts. So you had a number of announcements this week and this wild week from the U.S. side about policies, including restrictions on Chinese electric vehicles and data security. Those might come up and see where the two sides might meet together and cooperate in a G7 manner and talk about other ways that these two allies can counter China in different respects.
Well, I suspect that the matter of Israel is another one on the president's mind as they try to formulate a speech here next week. Michelle, they were hoping to be talking about a ceasefire as early as Monday. Is it still possible to happen before the State of the Union?
Well, for sure, that's going to be on the agenda. That's going to be the focus of the president, alongside drafting that State of the Union speech this weekend when he heads to Camp David. He'll head there this afternoon. But what he said yesterday when he left for that dueling border visit yesterday on the South Lawn of the White House, he told reporters, yes, hope springs eternal that they would have a ceasefire by Monday. But then he followed that up saying, probably not by Monday. But and the complications around talks with Israel on a ceasefire just got more complicated with the tragic shooting incident yesterday in Gaza that they're still trying to find answers for on the U.S. side. President Biden saying he was hearing two conflicting reports, at least, of what had happened there and who was responsible. And of course, that kind of gets in the way of these negotiations around getting a hostage deal, a ceasefire deal, to get hostages out, more aid in. So it's a lot at work here. He's going to have a super busy weekend ahead of a very busy week next week.
I guess it'll be time well spent at Camp David with what he has ahead of him. And you can read a lot more about what we expect in the address here on the terminal. As I mentioned, an increase in taxes on the wealthy, Michelle, and plans to highlight the CHIPS Act, which of course is now beginning to dole out money here to chip makers in the process of reshoring. We'll see what else we get. I suspect that there could be some news coming next week on the border as well. You mentioned his visit. We didn't really hear any details, Michelle. Could we get an executive order announced on Thursday night?
We'll see about that. I don't know if we'll have news from the State of the Union on that, but we do hear, this is kind of a messaging battle right now. You saw from the dueling border visits yesterday, President Trump saying, this is Biden's border crisis, and Biden shooting back that he wants cooperation. He extended a hand, he said, to President Trump to join him in this fight. But we'll see. It's benefiting, clearly from polling, it's benefiting Trump right now to paint the president as not doing enough, and to continue to try to push House Republicans to block these things, which Trump so far has been successful in doing.
Well, if you're watching us on YouTube right now, you see the very split screen that Michelle is describing. Michelle, it's great to see you. Michelle Giamrisco reporting for us at the White House today. She will be in the Oval Office when the president sits down with the Italian prime minister. And again, Ukraine is the purpose of this conversation as they try to find a plan B, or are we on to C now? I can't remember. There was a plan D at one point in the House, and we want to get started on this part of our conversation with a voice of authority. It's not very often we have him in studio, but retired General Ben Hodges is with us now, a senior advisor to human rights first, of course, former commanding general, U.S. Army Europe. It's great to see you in person, General. Thank you for being with us in Washington. Where to begin with the matter of Ukraine? It's looking like if there will be funding, there will be a longer wait. And the administration was warning us at the end of last year that time would run out by about now. This is the first day of March. Are we going to start seeing more of a deficit on the battlefield because of this? Or is Ukraine pushing the calendar, so to speak?
Well, of course, this is a terrible situation for Ukrainian armed forces, and it's also unavoidable. I mean, it's avoidable. This didn't have to happen like this. I think that we're going to see ammunition arriving from European countries here over the coming months, which they should. But the fact that the United States is failing to deliver ammunition is a terrible reflection, not just on the Congress, though, but also on the administration. Everything starts with the objective. What's the purpose? And the administration has not explained why this is so important to America, that Ukraine is successful.
The assessment in Kyiv right now is aiming for July, that Russia could in fact punch through front lines by the heart of the summer. What would that look like in terms of the war effort? Would that be a war lost?
So I think actually Russia does not possess the capability to knock out Ukraine or to punch through and exploit anyway. I mean, they don't have the large numbers of mounted formations and troops and logistics that could exploit, like they lost, Ukraine lost Avdiivka about two and a half weeks ago. There's been no real exploitation of something like that. So what I imagine is going to be happening this summer, there will be local tactical successes along the line by the Russian side. But General Syrskyi and the Ukrainian armed forces are going to stabilize this line for this year to buy time to build up ammunition, build up new units. They've got to fix their personnel system. So this year, I think, is more the year of industrial competition.
Well, and to that end, we're told that even if Congress approves the money tonight, while you're still in Washington, General, we don't have the means to make all of the stuff that we need or that Ukraine needs, that this has become a manufacturing chain problem. And we're not talking about that in this legislation, are we? If $60 billion went out to our defense contractors here, what could they do with it?
Well, of course, there are a variety of assets that are available that just need the funding to deliver it there. But what you're really referring to, of course, is the manufacturing of ammunition.
The old-fashioned stuff.
Yeah, actually, which is what they're asking for, as well as long-range precision munitions. A little over a year ago, I was speaking to a gentleman in the Pentagon, and he said, we make about 8,000 rounds per month because that's what we need for our own training. In less than a year, they quadrupled that number just by making it a priority and putting money on it. So the various companies that make ammunition expanded their capacity. And I heard Senator Vance the other day said that America doesn't have the capacity to make more. Like, what? This is the United States of America? And he's from Ohio. That of course there's industrial capacity. Is there enough political will to do it?
Remains a big question around here. And the Europeans are looking across the ocean, wondering if we're going to make good on this. At the same time, they've been slow to deliver shells to Ukraine. Can Ukraine count on its nearest neighbors?
It's an excellent point, and it's a fair criticism of our European allies. But even Chancellor Scholz, the German Bundeskanzler, just a couple of weeks ago, was out there at a groundbreaking ceremony for a new ammunition plant in Germany. Now, here's a guy that nowhere in his past did he ever imagine he would be celebrating the opening of a new ammunition factory inside Germany. There actually, I think, is a lot of ammunition in Europe. but it needs to be reprioritized. You remember the European Union announced they were going to find 1 million rounds to go to Ukraine.
Yeah.
They've delivered 300,000 so far.
Right.
It turns out about 70% of what is made in Europe goes to customers outside of Europe. So now heads of government need to reprioritize what they have.
They're still asking for long-range missiles. I know that the Germans have been kind of on again, off again with this idea. Is there anything that we can do when it comes to advanced weaponry to help them right now?
Yes. The long-range precision strike capability, such as the American ATACMS or the German Taurus, the British Storm Shadow, that there is no one weapon that changes everything, but every square inch of Russian-occupied Ukraine is inside the range of a U.S. ATACMS. Yeah. So in other words, every Russian headquarters, every Russian artillery, every Russian logistics site could be hit. There's nowhere to hide. Could be hit if Ukrainians had that capability. You know, for whatever reason, the United States, this administration has continued to refuse to provide that 300-kilometer range ATACMS. The Germans are hiding behind that a little bit.
Yeah. That would be more effective than something like an F-16 for Ukraine right now, would it not?
Well, certainly it would make a huge difference right now. The F-16s showing up probably, I think we'll see midsummer is when the Ukrainians will be ready to employ them. It's one thing to fly them, but to employ them effectively like our great Air Force does,
yes, right.
You know, that's an operation.
Abrams tanks are rolling. I saw a video of one of them on the ground in Ukraine. Remember, the argument at one point was, this will not help. This will only slow them down. You got a jet engine in this thing. You can't afford the fuel. Has it been a benefit, or do we not know yet?
Well, of course, it was a whopping 31 that were provided. Yeah. So now, 31 Abrams tanks, you get 31 of the best tank in the world. Yeah. But again, this goes back to the what was the objective? You know, the administration dilly-dallied for months and months and months about whether or not to do it. And I heard so many criticisms of the Abrams tank. Oh, it's so much fuel, it's so much maintenance. And I thought, well, why the hell do we have 4,000 of them in the U.S. Army? Right. Sorry. It is a great tank, but you don't just take it off the shelf and use it. There is maintenance required and training to get the full benefit of that great tank. What really matters is how is it employed by the Ukrainians, and I'm sure that they'll pick the best place where you get the most effect out of it.
Just got about a minute left, General. We saw news of a hypersonic missile being employed by Russia in Ukraine. We're told that our Patriot defense missile systems cannot catch those. Is that a game changer if we start seeing more use of that technology?
Well, first of all, I would never underestimate the ability of the Ukrainians to take what they have and make it better. Yeah. I mean, we've provided things, and then I like counter-fire radar, and I found out that radar was even better than I knew it was. Wow. Because they were able to, you know, if you're getting attacked by the Russians all day long, you get very innovative, very creative, and Ukrainians are among the most tech-savvy people I've ever met in my life. So I think they will figure out how to use what we provide, what the Brits provide, and they'll be able to. It's not about quality, it's about quantity. They don't have enough.
Right. I know you're typically living and working overseas, but you're always welcome here in Washington. We're always very curious to hear what you have to say. Our thoughtful General Ben Hodges, it's great to meet you in person. Thank you for coming in.
Thanks for the opportunity.
Of course, great pleasure. I'm Joe Matthew in Washington. This is Balance of Power, the fastest show in politics, as we turn our attention back to Congress coming up here. And what did not get done this week, that list is getting long. We're not going to shut down today, though. At least you can have a weekend. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ solidly in the green, and right now we are looking at the best level of the day on the S&P 500 index, higher by 26 points now. That is a gain of just about 0.5%. Dow Jones Industrial Average up 64, higher now by 0.2%. The NASDAQ Composite Index surging another 122 points, up 0.8%. NASDAQ, by the way, now at 16,215. 10-year yield 4.19% with a 2-year that is now yielding 4.54%. Spot gold up $39 the ounce, surging 1.9%, 2,083. Looking at West Texas Intermediate crude up 2.5% right now, 80.24 for a barrel of WTI. We're keeping an eye on shares of NYCB, commercial real estate lender. New York Community Bancorp plunging after saying it discovered material weaknesses in how it tracks loan risks. It wrote down the value of companies acquired years ago and replaced its leadership to grapple with the turmoil. NYCB shares, they are down now by 23%. Again, recapping, we do have stocks pushing higher with the S&P right now up 26, a gain there of 0.5%. I'm Charlie Pellet. Balance of Power continues, and once again, here's your host, Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to Balance of Power on this Friday here on Bloomberg Radio, on the satellite, and on YouTube, where you can watch us right now if you search Bloomberg Global News. And it's not just this program. Find our live feed there. You can back it up, catch up when you need to. It's pretty cool, live from our studios here in Washington and in New York. So many ways to find us on Bloomberg here, talking politics with all the lawmakers gone, well, at least most of them. They got it done yesterday. We're not shutting down today, or at least beginning to. If you're just joining us, hallelujah. 77-13. What do you mean there's no bipartisan action in Washington anymore? Congress approved the temporary funding bill here. This buys 2 weeks, kind of. Remember, it was staggered. So we're now looking at March 8th and 22nd as our new magic dates. So Joe Biden will deliver his State of the Union address next Thursday in a funded government. The day after, we'll see what happens. Although it does look like they have a deal on the 6 bills that will get us through the first part of this. And that's where we're going to start our conversation with Eric Wasson, who has been knee-deep in the madness here in Washington. Bloomberg Congress reporter. When you see the headlines roll, it's usually coming out of Eric's reporting. And it's good to see you, Eric. Thanks for all the great work this week. They actually got it done. What will we be talking about next Friday?
Well, I think it's not going to be a shutdown. We're looking at Sunday. They're going to release this bill. It's 6 parts, as you mentioned. About 27% of total government funding, at least the operating discretionary budget. We'll be combing that. We know it's got little nuggets in there, like a $20 billion cut for IRS out of that Inflation Reduction Act boost that they got. But it looks like it's basically a deal between congressional leaders. The question is, will there be any holdups in the Senate? We think the House is going to go first, which makes sense. Get it off their plate before Biden shows up for State of the Union, maybe pokes them a little bit. And then, the Senate will probably get it done. So I think those are the easier bills, though. The bills that are coming later in the month, Homeland Security with that hot button border issue, HHS, which involves, Planned Parenthood and abortion related funding. Those are going to be harder bills. So 22nd is the more difficult clip as far as I'm concerned.
Yeah, by all means. And defense spending, the Pentagon to that list as well. So a week after next, could we be talking about another potential shutdown here once we start dealing with budget riders? This could get messy quickly, no?
It definitely could. I think Johnson's really signaled he's not interested in a shutdown, and he's already prepped his conservatives. It was very interesting yesterday. We ran over to the House GOP morning meeting where there's often a lot of fireworks, and we were poised and ready, or in a panther-like crouch, as one of our executive editors says all the time, for them to come out and say they're going to oust Speaker Johnson. But they didn't. I think there's fatigue by conservatives. They're kind of realizing this is not their time. They haven't laid the groundwork to do a shutdown, and even when they have in the past, like under President Trump over a border wall, it didn't really go so well. They didn't really get what they were looking for in the end. So I think there's fatigue. I think the 3-week battle that happened when they ousted McCarthy over a stopgap spending bill was such a headache, and a lot of members were saying, "Look, what are we going to get?" think one guy said even if he went down to Disneyland and got Goofy to agree to be speaker, it would be the same result. So I think his job is safe. But the Ukraine issue is a more hot button one. We have Marjorie Taylor Greene again reiterating to us, the Georgia representative, that if there was a Ukraine bill brought to the floor, she would provoke a vote to oust him. And then the question then becomes whether do Democrats go along. There's been some reporting. We asked Hakeem Jeffries, a Democratic leader, if he would bail out the speaker. He says he's not making any commitments, but he predicts some moderate Democrats would. So that would be an interesting dynamic. I think Ukraine is the bigger danger zone for the speaker.
Let's get into that then. Assuming a perfect world, Eric, you start writing a story 2 weeks from now. They got it done. They passed a couple of mini buses, were funded through the year, no sequester, elbows up on the barrel. We got time to do stuff here. We turn our attention back to Ukraine. Will there be a defense-only bill that comes out of the House? I know that the Fitzpatrick bill, for instance, one that would ride on a discharge petition, some folks say is fantasy land. Could anything pass for real?
Yeah, that was very interesting when Fitzpatrick came out. He's talking about this discharge petition you mentioned for our listeners is a procedure where you can force the speaker to bring and the majority leader to bring a vote on a bill. He's starting that process, but we went to the Democrats and they're not interested. They want the full humanitarian aid to Ukraine and Gaza, and they want they don't want the border provisions that are in that Fitzpatrick bill. There's a few. Jared Golden, perhaps the most conservative Democrat from Maine, is on board with that. But it's not really a widely appealing to the Democratic caucus type of bill. They want to do a separate discharge petition on the Senate $95 billion foreign aid bill, get that out, and then talk about a border deal. Now, that's a really tough lift. It's a 2-decade-old problem, immigration in this country. Speaker Johnson, I thought, was very interesting when we pressed him. He said he's not wed to the House position, but the way I look at it, he wants about 90% or more of the House position. Interestingly, maybe the border wall is not so important to him as certain other things like remain in Mexico, limiting the ability of the president to parole immigrants into this country. He wants a lot of things that are just not palatable to Democrats. So to the extent it's still embroiled in the immigration issue, Ukraine's just stuck.
What are you hearing about the State of the Union, Eric? It's next Thursday, and it's a big night. Things were pretty wild last year. We were there. We could hear the booing. We could hear the heckling. We also saw Joe Biden turn that room around to his benefit a couple of times. It kind of reached a new level of contact sport. I don't even know what the heck you'd call it. What's going to happen this year?
Yeah, I think last year was a good night for Joe Biden. He sort of was taunting Republicans on Social Security and Medicare entitlement cuts, and got them to agree that they wouldn't pursue those. That highlights a strength for Democrats. I think Democrats would be very happy if they get a performance like that out of Joe Biden, who's showing a bit less energy these days than he was even a year ago. We've already have a story on the terminal. He's going to talk about tax increases for the wealthy. We'll be looking for what the details of that are. I suspect it's allowing some of the Trump tax cuts to expire. They do in 2025. But again, it's a campaign, moment. I don't think there's proposals that he's going to put forward that are actually going to become law. It'll be shortly followed by his budget, March 11th.
Yes,
budget proposal for the next fiscal year. Really a campaign document as well. So it's a lot. It is fantasy football at this point, but it's all about the election.
It is funny to think he's dropping a budget right in the middle of what could be the countdown to a shutdown. I don't know. I'm glad you mentioned that piece. We talked to Michelle Jamrisco earlier from the White House about it. The president advocating plans to increase taxes on the wealthy and corporations and to lower prescription drug prices in his State of the Union address that they'll be punching up this weekend at Camp David. You just said something very important, Eric. Nothing, if I heard you right, that he proposes on Thursday night will likely become law. Is that fair to say?
I think so. I mean, drug prices is interesting. There was some talk about a bipartisan deal to rate in what's called pharmacy benefit managers. There are ways to maybe improve the system, to get more relief to beleaguered consumers. But that kind of fell by the wayside. We're thinking maybe the lame duck would be an instance, no matter who wins the election. This is the period Congress meets after the election when many ousted lawmakers who have no real electoral worries anymore can pass something like that. But, short of that, I mean, this anytime before the election, I don't see anything on drugs or anything else really passing. We're still looking at this tax bill that did pass the House. I should mention, there's a lot of talk in the Senate about maybe moving that forward. I was very intrigued with Markwayne Mullen from Oklahoma, said he's got 12 Republican votes to break a filibuster. So maybe the $78 billion in tax breaks gets through, but it's really dividing Senate Republicans, and something that we'll also be looking for in the wake of funding the government, whether that moves forward or tax season.
Well, boy, that says a lot. That says a lot, Eric. You were sitting right here at this table a couple of weeks ago talking about, hey, this is the one thing that might be able to sneak through. They got a deal on taxes and the child tax credit, and it looks like even this might not happen now.
Yeah, that's right. And some people are very explicit, like Chuck Grassley of Iowa said he doesn't want to give president a win, so there's a lot of politics at play in an election year. But I talked to Todd Young, for example, a moderate Republican. He said, look, this is a win for the business community, a win for families that want to have children. It's involving a child tax credit boost for the working poor. There is an argument that there's a one provision in there that might reward people who don't work by allowing them to claim a previous year's earnings. But that's also a debatable point. We could see a tweak to that, perhaps. That's Mike Crapo's biggest issue. He's leading the charge against the bill of Idaho. But Ron Wyden, who authored the bill, said, look, this has already been negotiated for 4 months. It's already passed the House overwhelmingly. Let's just get this done so people can get this money.
Boy, a lot to look forward to here. I'm glad you get a weekend, Eric. We'll get right back to it next week, and we'll have the president in the house. It should be something. Thursday night special coverage here, of course, on Bloomberg Radio, on YouTube, and on Bloomberg TV when the president addresses a joint session of Congress. I'm Joe Matthew in Washington, where we bring you up to date now on world and national news. The panel is coming in next. First, Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Turkey is joining Saudi Arabia, Egypt, and Jordan in condemning Israeli forces firing on Palestinians yesterday as they waited for the delivery of aid. Turkey's foreign minister calls the event yet another crime against humanity. Israel says many of the dead were trampled in a chaotic crush for food and that its troops only fired when they felt endangered. The health ministry in Gaza says 100 people were killed, at least 700 wounded. Thousands lined up today in Moscow to pay their respects at the funeral for Russian activist Alexei Navalny. Many shouted, "No more war," as they stood outside the church. The Interfax news agency quoted a spokesman for Vladimir Putin who said the Kremlin had nothing to say about Navalny. Firefighters in Texas still do not have a handle on the Smokehouse Creek fire that's devoured more than 1 million acres of land. 2 people are known dead, and cattle farms have been overrun in one of the largest beef-producing areas in the nation. Ryan Hightower lives in Fritch, Texas.
It's heartbreaking, not just for me and my family, but all the other families that have lost.
The Smokehouse Creek fire is the largest wildfire in Texas history and the second largest in U.S. history. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. Stocks continue to push higher. S&P 500 index right now at the best level of the day, up 29 points, up by about 0.6%. The S&P at a record 51.25. The Dow higher now by 67 points, up 0.2%. The Nasdaq Composite Index is up 135 points for Nasdaq. That is a gain right now of 0.8%. 10-year 4.20% with a 2-year 4.53%. Bonds climbed as disappointing factory data and a decline in consumer sentiment solidified bets on interest rate cuts. The 10-year again 4.20%. Spot gold up 2% now, surging $40 the ounce. The precious metal now at $2,084. West Texas Intermediate crude just below $80 a barrel right now. WTI up by 2.2%. So the oil did trade above the $80 threshold just a few minutes ago. Among some of the oil stocks today, we've got ExxonMobil up 1.3%, BP up 2.1%, Chevron up now by 0.9%. So bottom line here, records for NASDAQ and the S&P 500 index. Michael Purvis is the CEO and founder of Talbacken Capital. Earlier today, he told us that the S&P 500 could go to 5,500 by the end of the year.
The lack of hiking is really what's key here. He has announced, sort of that big message of pivoting away from hiking to, if anything, the action is on the cutting side, right? So that's a very important thing from sort of the Wall Street side. Now, the dual Goldilocks condition means that concurrently, and this is really unusual by the standards of the last 12, 14 years, is that you have a worker consumer that's kind of in a Goldilocks condition as well.
You can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. So again, recapping, U.S. stocks are advancing. S&P at a record up now 28 points, up 0.5%. I'm Charlie Pellet, and that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we thank you. Welcome. It's a Friday and the threshold of the weekend. It's Balance of Power live from Washington. We've got our panel with us today. We're in good hands. Everything's going to be all right. The government won't start shutting down tonight. Maybe it will next Friday, but we'll just take this 1 week at a time. As the president returns from the border, also Donald Trump back from the border yesterday, and their dueling speeches or split screen day or whatever the headlines want to call it. Still scratching my head a little bit as to why either of them went. Particularly the president, after being goaded for months to go down to the border and say something and do something, to finally show up there a year later in Brownsville and have nothing to announce, was curious. Urging, of course, the House to act on the bill that the Senate passed that we are already told is DOA. Jeannie Shanzano is back today, Bloomberg Politics contributor, alongside Rick Davis, Bloomberg's signature panel here. Great to see you guys. Happy Friday. Jeannie, what was the point of that if no one had anything to say?
You know, I think for the president, it was a good move, actually. First of all, I like a good showdown in Texas, so I have to put that out there. So I'm glad they both went, and all we needed was cowboy boots. But, you know, the reality for Joe Biden is that he is taking on Donald Trump as we enter this general election on the issue that is most favorable to Donald Trump. And I think he's making a really important point. And that point is, join me in urging Congress to act. And, you know, what did we hear from Donald Trump on the other hand? I still am scratching my head to understand what he was talking about when he was saying languages that nobody speaks and nobody knows. I mean, it was a lot of hyperbole, a lot of statements. I couldn't get my head around it. But I think Joe Biden's point was well taken, which is that I care about this issue and I'm willing to meet you halfway or more than halfway to resolve it. And you aren't, because you want to keep people waiting until and unless you're elected president. So this is all about you. And for the administration, it's about solving a problem. I think that makes sense. I do think we will see an EO eventually, but I'm not a big fan of the EO. He's going to be forced to do it, maybe, but it doesn't resolve the problem. And by the way, he also talked about comprehensive immigration reform, and I'm glad he raised it because it isn't all about security.
What'd you think of the optics yesterday, Rick? We didn't get announcements, but we got some photographs, and for a lot of people, that's all they're ever going to see or know about it with the attention spans, and people aren't listening to speeches. You've got Joe Biden there having a meeting, getting briefed by Border Patrol, expressing optimism about progress that could be made. Then you've got Donald Trump shrouded in barbed wire. It looks like he's in the demilitarized zone down there. Which will resonate?
You know, look, I mean, it's two different people with two different problems. I mean, Donald Trump is substantially ahead of Joe Biden in voters' attitudes about who is best able to handle the border crisis. That's what matters, right? When you look at Michigan, when you look at Georgia, when you look at Arizona, Joe Biden is not in the game. One of the most important issues in America, second only to the economy, that frankly Biden's in even worse condition on, is the border and border security. And I am all for comprehensive immigration reform, done a lot in my career to pass it. But when you talk about what is on first of mind of voters going into the ballot box in November, it's going to be border crossings. And Donald Trump did what Donald Trump always does. He demagogued it, and he's great at it. I mean, you know, you would think the entire country was about to collapse under the weight of illegal immigration. And Joe Biden, you know, didn't have anything to say. He didn't say he was going to do anything about it. He talked about a bill that's already dead. He talked about working together. Really? You're opposed to Donald Trump? There's zero chance of working together with this guy. Trump's ripping his face off and he's playing nice. You know, it doesn't make any sense. If he doesn't put something on the table soon that is substantially different than the way his administration has adjudicated the border, he is going to be in deep trouble in November.
Well, Rick just said a lot, Jeannie, and Joe Biden has an opportunity, I guess, to affect the conversation next week. But after we've seen the impact that Donald Trump can have on Capitol Hill, it makes you wonder what we're going to see here. We're celebrating the fact the government isn't shutting down tonight. You don't see progress on any of this until after the election, do you?
I don't. And I don't see progress on this till after the election. And I also don't agree that this is all negative for Joe Biden. You know, immigration is the issue that was helping Donald Trump most. Why? Because quite frankly, the numbers on the economy are pretty strong. And while we may have a lagging effect in the polls, we see it in the consumer confidence numbers, and we see it in the actual data that people at Bloomberg talk about and look at every day. So as that moves off the table for Trump, he is right to focus on immigration. But what did he do to himself? He told Congress not to pass this bill, the best bill by most conservative measures that we have seen in 100 years on border security. Why? Because he wants to be elected and he doesn't want to give Joe Biden a win. That is not something that you want to be running on, that I don't want to address an issue because it's not in my interest. So I do think that split screen yesterday helped Joe Biden more than hurt him. It was run live by many stations, and people see here is a president at the border. He's inviting his number one opponent. Tell Mike Johnson and those folks in Congress to pass this bill. Donald Trump, of course, won't do it. And so I don't see this as a loss for Joe Biden. I do think we get an executive order out of Joe Biden, but let's all be clear. That is no way to run a government. You don't run a government by EO. You run it by legislation. And if Joe Biden wants to repeat Harry Truman in 1948, all of this do-nothing Congress helps him, not Donald Trump in the end.
You have solid rationale here, Jeannie. It's a solid rationale, but it also requires people to pay attention. Do we think, Rick, that people are listening and reading closely enough to know that Donald Trump sank this thing? Because they're hearing lawmakers, Republicans every day say that would have done nothing to help the border.
First of all, Joe Biden did not use the bully pulpit to sell that bill. He was missing in action on that entire thing. So he missed a perfectly good opportunity to really stick his neck out and say, you know what, here are the elements of this Senate compromise that we need to push, and I need to sell it. He could have gone all around the country promoting that, but he played it safe because his liberal constituencies didn't like it, and he didn't want to upset them. So he's caught in a trap. He can't do what Jeannie said and really embrace real reform.
All right, we're going to keep this going here with Rick Davis and Jeannie Shanzano in just a couple of moments. They're with us for the duration today. It's Friday on Balance of Power. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Sources tell Bloomberg Boeing is in discussions to acquire Spirit Aerosystems Holdings, its struggling former unit at the center of numerous quality issues affecting 737 MAX jets. George Ferguson is a senior aerospace analyst with Bloomberg Intelligence, and he says it all comes down to one reason.
Quality control. It's absolutely quality control. They must be looking inside Spirit. I know they've been looking inside Spirit for months. My guess is they've looked inside and they just feel like they can't control quality well enough as an outsider.
George Ferguson of Bloomberg Intelligence, shares of SPR, that is Spirit Aerosystems, up 13.7% right now. Boeing, a member of the Dow, moving lower right now. We do have Boeing down by 1%. Agricultural trader Archer Daniels Midland says it has delayed the publication of its annual report. Dell Technologies shares are surging today, up 28% after reporting better than expected sales and profit, fueled by demand for information technology equipment to handle artificial intelligence work. Known for its PC business, Dell has attracted investor attention over the last year due to a spike in interest for its high-powered servers that are needed to run AI networks. Again, Dell right now higher by 28%. Hewlett-Packard Enterprise has reduced its outlook for sales growth and profit in the current fiscal year, citing low lower demand for networking products, and a crunch in computer chip availability. Shares of HPE, little change now, up 0.9%. Those are our top company stories, and this is Bloomberg.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
A day after the dueling border speeches, as Joe Biden prepares to head to Camp David this weekend for important work on the big speech. Next Thursday night, the State of the Union, and there are questions about what he might announce with regard to the border, having not heard an announcement yesterday. This is what we've been discussing with Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Rick, would you feel better about this if there was, in fact, a big announcement on Thursday night? In lieu of legislation, I, as the president, will use an executive order to do the following. Is that going to happen in less than a week?
Yeah, I mean, look, I think he's got to do something very tangible to address the concerns that the American public have that he is not doing enough when it comes to border security. It's the largest portion of people who say that they disapprove of his job performance are geared toward those people who are concerned about his performance on the border. If he does not fix this, it doesn't do any good to have an improving economy, because this is the thing that is holding back his job approval and his ballot when it comes to people's confidence in the next term for Joe Biden. So, yeah, I think he's got to put something on the table, and he ought to quit worrying about the left flank of his party. They're going to vote for him no matter what. And otherwise, they'd get and deserve Donald Trump.
Are we going to see Democrats sitting on their hands when he gets to the matter of the border, Jeannie?
You know, I don't think so. I think most reasonable people understand that a nation like the U.S. or any nation needs to have a secure border. But what we haven't talked about, and why I was happy the president raised it yesterday, was immigration is not just about security. That bill that he supported and Republicans wanted was about security, but that's not all immigration is about. Immigration is also got to be comprehensive reform. And while I agree politically, it makes the most sense for Joe Biden to go off, issue EOs, that politically makes the most sense. But that is no way to govern a country. And we need to be honest with the American people. What happens with an EO? The next guy who comes in or the next woman is going to overturn it. That's what happened to Barack Obama when he did it on the Dreamers. They're often overturned in courts. If you need any funding, that's got to come from Congress. So, you know, we can say politically, yes, he should go off and issue EOs. The responsible thing to do is legislation via Congress. And that's not just about border security, but about things that are widely popular with the American public, like a pathway to citizenship. We need people to work in this country, allow them to work, right? So all of these things need to be addressed. And we haven't even gotten to the part of the conversation in this campaign yet about Donald Trump's plans that people describe as utterly inhumane, of rounding people up and deporting them in the millions. I'm not sure polls are going to support that either. In fact, I know they won't.
Well, no, that's true. Even though we did hear talk of mass deportations in his first term. Rick, I want to give you a minute to respond to that. You talked to the Chamber of Commerce, you talked to the National Association of Manufacturers, you talked to a lot of employers, and they say, great, let's have this thing done when it comes to border security, but we need an active immigration plan to address the labor shortages in this country. You have been a long champion of comprehensive immigration reform. Has that just fallen out of the conversation?
Yeah, look, we made comprehensive immigration reform a central part of our campaign in 2008. And frankly, there wasn't a bit of difference between John McCain and Barack Obama on immigration reform. And then what happened, right? You know, we lost and Barack Obama won, and he didn't put a single thing into Congress for comprehensive immigration reform. In fact, the guy before him, George W. Bush, was the last president to really invest in trying to pass immigration reform. Joe Biden put something together in the first year of his office and has not spent one political nickel trying to get that passed. And so unless he's prepared to make it a central part of his campaign and then drive that politically, he's not going to get anywhere with the voters.
It just might be. Rick Davis and Jeannie Shanzano, our signature panel. They'll be back with us, of course, in Hour 2 with a lot more to talk about. Kaylee's on the way in. Hour 2 starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The president will propose higher taxes on the wealthy and businesses in his State of the Union address next week. Welcome to the fastest show in politics as Joe Biden prepares to go to Camp David for the weekend to punch up his address to a joint session of Congress after another round of economic data that could be key to the outcome of this election. I'm Joe Matthew in Washington alongside Kaylee Lyons. It's good to see you, Kaylee. You made it to Friday.
Happy Friday, indeed.
Happy Friday to you. We saw data this week encouraging, I guess we could say, on inflation. At least it hit targets.
Sure.
But also today, the first drop in consumer sentiment in 4 months.
Yeah, actually the biggest intra-month drop, because this was the final read we got today, which dropped from the preliminary read by almost 3 points. That's the biggest intra-month drop we've seen since March of 2020. And we all know what happened in March of 2020. That was the onset of the pandemic. So how much of a concerning sign is that, especially as we're seeing gas prices moving up? Oil hit $80 a barrel again on WTI for the first time since November today.
Well, I'm glad to say we have the voice of an expert joining us with the view on the White House today.
Indeed, we do. Jared Bernstein, the chair of the White House Council of Economic Advisors, is joining us now live from the White House North Lawn. Jared, always good to have you on the show. Thank you very much for joining us, Mr. Chairman. When we look at data like this, which suggests that after a lot of conversation about consumer sentiment being on the upswing, maybe it is not actually that steady, perhaps not that sustainable, potentially still a little bit vulnerable. Does that make you nervous?
Well, the 3-month Consumer Sentiment Index is up almost 25%. And that is a much more reliable trend than this wiggle we got off of the movement from the preliminary, which was positive, to the final, which was negative. Look, your point about the gas price is a good one, and we're going to have to keep watching this very carefully. But I don't think anyone should change their view that consumer sentiment, consumer confidence has been moving in a pretty reliable way in a direction suggesting that economic improvements have been reaching people in a way that they weren't a few months ago. And those improvements, of course, reflect easing inflationary pressures, a strong job market, rising real wage growth, very strong consumer spending and GDP. So any 1 month can wiggle and bounce one way or another, but the trend remains solid in that regard.
We're hearing talk, Mr. Chairman. It's good to see you. Welcome back of a world in which there are no rate cuts in this calendar year. You know I wouldn't ask you about Fed policy, but I just wonder what that says about the strength of this economy and whether it's a runaway train.
Well, I guess you have a lot of things going in different directions here. I mean, we had some inflation reports that came in above expectations, and then we had an inflation report that hit expectations dead on. We had a retail sales report that, if anything, went the other way, more cool than hot. We have job numbers that have been exceptionally strong. I think you really have to, again, I think it's really important to look at the underlying trend. One of the most important is the unemployment rate that's been below 4% for 2 years running. That's a great number. It's supporting, as I mentioned earlier, nominal wage gains that are beating inflation. So real wages up about 10 months in a row. Again, a pretty reliable trend there. So one of my jobs is to, of course, look at carefully and get all kinds of nervous about the high-frequency data flow, but to really keep an eye on the underlying momentum, which remains strong.
Well, you say the underlying momentum remains strong. You point to the strength of the labor market specifically. When you look at this economy, Mr. Chairman, do you see any sign of easing being necessary?
Well, I'm not going to get into what the Federal Reserve should do with monetary policy. What I will say is I just was looking at some of the forecasts for Q1 GDP, And I've seen numbers that are in the 2% range. Let's call that something like trend growth. Now, look, the way these hydraulics works, as you two well know, is that if the economy is growing at trend, the unemployment rate tends to stay around where it is. And again, my very broad theory of the case is that as the labor market remains strong and inflation continues to ease, again, on trend, continues to ease. And that, too, by the way, is a very reliable forecast. Virtually every forecast I've seen has inflation continuing to ease throughout the year. That's a recipe for rising real wages. Now, in an economy that's 70% consumer spending, that's a good recipe for continued growth. I'm not going to say anything about what the Fed should do there, but that is and has been a reliable recipe to keep things moving forward in a good way for American households.
Jared, I'm sure you're looking forward to the State of the Union address. This is a big week ahead for the White House. I don't know to what extent you're involved in contributing to the framing of the economic argument that the president is going to make next week. But we're reporting that he's going to call for some familiar ideas, higher taxes on the wealthy and businesses. There are some other things that we can talk about outside of the economy, but I wonder what it is that you're looking forward to message to the American people next week.
One of the reasons I get to come out here and talk to you is because I don't get ahead of the president. I'm certainly not going to do that when it comes to the State of the Union. But what I can tell you is the last part of your question is very much on point, which is the message to the American people, not referring anything to SOTU, as we call it around here, State of the Union, but just the ongoing economic recovery. And I guess I do think that this narrative tends to get lost in the hurly-burly of the everyday news flow, which I understand. I'm part of it. So are you. Sure. And we get it. But let's pull back a second and think about where we were and where we are. Okay, when we got here, the vaccination rate was about 0. We had a great vaccine, but it wasn't getting out there. We had families and businesses looking really worried about getting to the other side of the pandemic. The president gets here, puts the rescue plan in place, gets checks in pockets, shots in arms, massive improvement in the vax rate. And here we are now, all these years later, in the midst of a remarkable recovery, particularly in the sense that people said we couldn't do it. I mean, Tony economists, said we couldn't get the inflation rate down by 2/3 without giving up a bunch of points on unemployment or on GDP. Well, I just told you we had a GDP north of 3% in Q4, tracking 2% in Q1, unemployment we've talked about, and all of this with inflation down 2/3 off of its peak. So I would consider this pretty remarkable recovery. Now, for President Biden, it only matters if it's reaching families at their kitchen tables, full stop. If I go in and tell him, I go in the Oval and tell him about GDP and the stock market, he's going to want to know from me, how is that helping families like the one I grew up in, Jared? And I will explain to him that we've got real wages growing for middle wage workers, growing for low wage workers. And in fact, they're growing faster at the middle and the bottom than the high end. So the economy is delivering the goods to a lot of working families as prices ease. Now, we've got more work to do, particularly on that price side, but moving in the right direction, and sentiment indices starting to reflect that.
Well, so on the price side, given everything that you just told us about how wages have increased, the consumption engine is still very much chugging along, GDP growth stronger than expected, all of that indicates that the demand is not going down in the way that perhaps was intended originally. And I just wonder, how great of a risk do you think there is of a reacceleration in price pressures because demand has been so strong? Can you rule out that we will see another upswing in inflation?
Well, I think one of the things that we often do, and again, it's understandable, especially with the high frequency reporting and scrutinizing every data report, is that we're looking at all these bank shots. If A happens, what will B and C mean for inflation? Sorry, we've got some noise in the background.
Business goes on at the White House. We understand, sir.
we love to see working people at work around here.
That's right. It's a tight lawn game.
What I think we have to keep in mind is that the best indicator of inflation is inflation. All right? There are a lot of bank shots and a lot of ways demand can play through this. But our own analysis at the CEA has been quite clear, and I think this is largely confirmed by many other economists who've looked carefully at this, is that the disinflation we've achieved thus far has largely come from improvements on the economy's supply side. In fact, that's almost axiomatic when you think of inflation easing 2/3 off of its peak without giving much on the demand side. It kind of almost has to be supply side contributions. And our own work explains about 80% of the disinflation through supply chain unsnarling, through improvements in the labor force in terms of labor supply. We think there's still more room to run there. So it's not enough to just look at the demand side of the equation. You have to look at the supply side as well, and you have to look end of the day, beginning of the day, middle of the day. Look at the inflation indicators, which again have been easing solidly with a bump here or there in any given month.
I had an interesting encounter with Tom Suozzi earlier this week. Mr. Chairman, the newest Democrat in the House of Representatives, he was sworn in Wednesday evening. This, of course, is George Santos's former seat, and he was asked by many of the folks who were there about how did he win, and he was talking mainly about the economy, a little bit about the border as well, but he seemed to have a sense of what drives the angst, the frustration, in many cases the anger behind the MAGA movement, Donald Trump supporters, and many Republican voters around the country. And he pointed to wages as the first thing. You make $7, $10 minimum wage, even $15 an hour. That means you're not pulling in more than 20 or 30 grand a year. You can hardly afford to live. It's impossible to guarantee you can send your kids to college, secure your family. And he said that is the root of all of this. What's the message to those voters who are looking to Donald Trump for relief?
I think you really have to ask yourself, who's fighting for whom? I think we saw this contrast at the border yesterday. This president is consistently fighting to solve the challenges that we face right now. I think his track record in challenge solving on the economy is extremely strong. That's what we've been talking about for the last few minutes here. But I think the larger issue here, and answer your question, is which person, which administration is going out there and trying to solve exactly the problem that newly minted Congressman Suozzi was identifying. This president wakes up every day trying to figure out new ways to help families like the one he grew up in. Most recently, that's been about lowering prices, going after junk fees, actually legislating lower prices for prescription drugs, for health coverage. The opposition wants to take that legislation away. They want to repeal it. Now, if you repeal something that's putting downward pressure on costs, guess what? Those pressures reverse and they go up. So I think it's a very clear matter of who's fighting for whom and who is essentially trying to create a sense of chaos and dysfunction. This president is all about good, solid governance on behalf of working families, and he's got a track record to prove it. And we've got some great unfinished business in the areas of housing, in the area of child care, in the area of lower costs that we'd like to keep working on.
Well, and the ability to continue working on that will obviously depend on the outcome of the election in November. And on that note, Bloomberg, together with Morning Consult, just released a survey yesterday of the swing states, which shows Biden is behind Trump in all 7 of those that we polled. And on the issue of the economy, almost consistently in every state within the data, the feeling of the national economy is much worse than the feeling of the state economy or the local economy. As you get closer to home, people actually feel better. How do you make that resonate nationally? What can the White House do to make the feeling about the economy as a whole better if it's not so bad when you're just looking at your neighborhood?
Well, first of all, let me just say that the poll that matters the most is the one which happens when folks pull the lever or fill in the voting forms, and those polls have consistently favored Democrats. What I would say is that we have to keep our heads down, not get overly absorbed in the ups and downs of the kinds of polls you just mentioned, which have proven to be pretty unreliable, I think, when it comes to actual voting behavior, and focus on very much, what we've accomplished and what we intend to continue to accomplish. When we got here, we had an unemployment rate that was unacceptably high, and the very first economic speech that the president gave, he talked about the importance of getting back to full employment. Well, he did that. He got back to full employment very quickly, historically quickly, and we've stayed there. while we've stayed there, we've managed to work on improving the economy's supply side and unsnarl some of those chains, helping to increase labor supply, helping to increase the flow of goods into our retail sector, and that's helped to ease inflation significantly. Meanwhile, he's legislated historic investments in the future in clean energy, in lower health care costs, in domestic production of semiconductors, domestic production of EV cars and batteries. So it's a fantastic track record, and it's one we will continue to talk about. Now, if you want to talk about some indices, you know, I would argue that a good question 3 or 4 months ago is, why isn't everything you're telling me, Jared, reaching the consumer sentiment indexes? But you can't make that argument so strongly anymore. We have the UMISH sentiment up even with today's slip. It's up 25% over the past 3 months. So it looks to me like the progress that we're made is actually starting to be felt by more and more consumers. We're going to keep our head down and do all we can to continue to move in that direction.
And Jared, final question for you. You've been very generous with your time today, sir, and we appreciate it. But other news today comes from commercial real estate lender New York Community Bank Corp, plunging again, saying it discovered material weaknesses in how it tracks loan risks. Obviously, there are some idiosyncratic factors at play here specifically for NYCB, but to what extent is the White House concerned more generally about commercial real estate right now, or broader knock-on effects it could have for the banking system?
CRE has been on our watch list at CEA for a long time now, so this is not a new thing at all. What we try to do is get away from any particular case, and especially commenting on any particular case. We don't want to influence market moves at all in this regard.
Sure.
What we're looking at is the impact on the economy, the dynamics, the narrative that you and I have been discussing for the last few minutes out here. And what we see are bank, household, and corporate balance sheets all looking pretty strong. Now, there's been some increases in debt accumulation. There's been some increases in some default rates. But many of those, if you look at them historically, they're kind of coming off the mat. They're back to around where they were pre-pandemic. I think from our perspective, the most important thing is, are those balance sheets as such that we think that the risk of systemic contagion is quite low? And I would argue that they are. If you look at the debt service that folks are paying as a share of their income, it still looks quite low, and that gives us some faith that we're in a good place with the buffers to absorb what we're seeing.
Mr. Chairman, I feel like you brought us outside for outdoor class today. I feel like I'm back on Boston Common. It looks like a beautiful one on the North Lawn. Thank you for the seminar and for always being so generous with your time. Jared Bernstein is chair of the White House Council of Economic Advisors. Deep dive there. Kaylee, we covered some ground. You want to play it to the panel next?
Sounds good.
Rick and Jeannie are with us on a Friday, of course, our Bloomberg Politics contributors and signature panel here at Balance of Power. And, of course, we've got a lot more to talk about beyond the economy, with the campaign trail in focus and a leadership battle on the Hill. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We are trading at just about the best level of the day right now on the S&P 500 index, up 31. That is a gain of 0.6%. The Dow Jones Industrial Average pushing higher by 53, up 0.1%. S&P at a record right now, as is the NASDAQ Composite Index. Tech stocks continue to power higher. NASDAQ up 158 points right now, up by another 1%. We've got the 10-year now yielding 4.19%, with a 2-year that is yielding 4.53%. A surge for spot gold today, up $42 the ounce to $2,086. That is a gain of 2.1%. West Texas Intermediate crude oil surging 2.3%, $80 a barrel right now on WTI. New York Community Bancorp, a commercial real estate lender, is plunging, now down by 24.8% after saying it discovered material weaknesses in how it tracks loan risks. It wrote down the value of companies acquired years ago and replaced its leadership to grapple with the turmoil. Again, right now, NYCB plunging 24.7%. Recapping, stocks higher on this Friday. The Dow, the S&P, NASDAQ all advancing 31-point gain right now on the S&P, up by 0.6%. Balance of Power continues, and once again, here are your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much, reminding us all that it is Friday. Finally. TGIF for real this week. Because, Joe, we have had a lot of news in this week in Washington. Not that every week isn't busy. It usually is, even in August, as we found out in 2023. But this week, what did we get? We got a funding deal that finally passed last night. Could have been talking shutdown today. We're not going to do that until at least next week. Mitch McConnell stepping down as GOP leader. You got some Trump news out of the Supreme Court as well. There are definitely things missing from
that was
this
just
list.
Yesterday, by the way.
And
I love that
is
you
right.
I love that you tried that off the top of your head. If we actually thought through it, there'd be many more.
Yeah.
That was all while we were on the air yesterday. Well, maybe Mitch McConnell was the day
Wednesday,
earlier. I can't figure that out.
It all blends together.
Yes. So it means a leadership fight, though. Mitch
Yeah.
McConnell says he's going to step down in November, and that is not keeping folks from raising their hands. John Cornyn, senator from Texas, cracked the seal yesterday. He was the first
Yep.
to formally announce his intentions, right? And he's already asking his colleagues for their support. But this is going to get a lot bigger than that.
Oh, absolutely. He's just one of the Johns that we're thinking may throw their hat into the ring. We know that Senator John Thune, who's the current minority whip, is considering this as well, making calls to his colleagues. Then there's John Barrasso. And there's other names, too. There was reporting yesterday that Trump is encouraging Steve Daines to get into the race, which just speaks to over the next 8 months, there's going to be a lot going on in terms of this Senate Leadership Conference.
Well, let's get into it with the panel. They're with us on our Friday edition here. Rick Davis and Jeannie Shanzano is back today, Bloomberg Politics contributors. Rick, you spent enough time working in the Senate to have a better sense of this than most of us. We've talked about the three Johns, Cornyn, Barrasso, and Thune. Thune, of course, endorsing Donald Trump just a couple of days ago. And I wonder the extent to which Donald Trump will factor into this leadership fight.
Well, I think you need to understand that these internal leadership jobs are incredibly difficult to vote count because senators will tell you they're for everybody. They will never tell you they're against anybody. And so getting a clear sign as to who's for who is going to be incredibly difficult in this interim period, you know, between now and the election. And you just mentioned a lot of candidates, and I didn't throw in Tim Scott, who's been salivating over leadership, and probably many others before this is all over with. But I would say there are two major drivers here. One is, are we in the majority or are we in the minority? We missed an opportunity 2 years ago. A lot of blame on Donald Trump and the candidates he endorsed kept the Senate from turning Republican. And so Daines has got a pretty heavy lift. He's got to make good on that. All he's got to do is win two. And there are probably 4, 5, or 6 races that could help him do that. So if he does play an important role at the campaign committee to turn the Senate Republican, then he probably has a rightful shot at least some form of leadership. Maybe not the majority leader at that point, but certainly he's going to have some wind at his back. If he doesn't accomplish this, he will be a failure and will be backbenched again because nobody is going to want to see a failure in this regard.
All right. Well, it also raises the question, and maybe this doesn't apply so much to Steve Daines, Jeannie, but when Mitch McConnell was on the floor, he talked about how it was his time to go because it's time for a new generation of leadership. Are any of the Johns really a new generation of leadership?
Yeah, I think they would tell you they are, Kaylee, but of course, many people would say they are not. And, the reality is that I think a lot of this is going to depend on whether, in fact, Donald Trump wins the presidency, because, of course, if he does, he's going to have his thumb on this. But if he doesn't, then there will be an easing off, obviously, from him. And so, somebody like, Steve Daines, who they're talking about, and you were just talking about, may not be in the offing if Donald Trump indeed does lose. And it's, interesting because all of the Johns that we keep hearing about did endorse Donald Trump, but he doesn't seem to be excited about any of them, at least as far as we can tell. And I think it's just incumbent on us to remember that this vote in the Senate is a lot different than the House. And one big difference is a secret ballot. So as Rick was saying, they can say that they're going to vote for somebody or not say anything. And unless, you see somebody leaking the ballots or something like that, which I would doubt, we won't know. And so that makes this a lot different because they don't have to do it publicly.
Mitch McConnell is already facing pressure to step down before November. Rick, will he?
No, there doesn't really appear to be much real internal pressure. It's the same rabble-rousers that have opposed him consistently, led by people like Ted Cruz. And I think that's all just a bunch of noise. I really don't think it'll amount to much. This is his moment to really spend time looking at what he can do to help the caucus through the next budgeting cycle. Remember, too, when he leaves the leadership, he will likely want a big job in a committee, especially for the majority, and that likely would be appropriations. So the one thing to keep an eye on is how big a role he plays in setting up the 2025 budget.
That's a really good point. As we look to 2025, who could ultimately be leading the Senate, whether or not they're doing so in a majority sense, or I'm talking specifically the Senate GOP here, a majority or a minority. Rick, does the conference not need to figure out first what exactly it wants to stand for, what it wants to prioritize, kind of mission first before they can pick a leader? Because it feels like Mitch McConnell was the leader, but other people wanted different things. We saw that very clearly borne out when the border national security deal first showed up a few weeks ago, only to quickly die. How much work does the Republican Senate conference need to do here?
Yeah, I think the issues sort of break along two lines, Kaylee. One is those internal things, like what is your commitment to minority rule? What is your commitment to filibuster? What are the rules that you're going to help promote? Because that's how the body functions. And so there'll be people who want to stake out some turf on the internals, which are important to each member. And then, you're not going to find a big difference in the ideological sort of separation between all these candidates. They all basically agree. Every one of them agrees on stronger border, to do more on taxes and the economy, to, strengthen, our resolve around fighting regulation, things like that. You're not going to find a big difference. And I don't think these external forces like Donald Trump matter much. The Senate is a uniquely individualized place. They're there for 6 years when they get elected. And they really don't get impacted by outside forces very much. And so my guess is it's going to be as much a personality contest, people with coalitions to govern, a little bit of what we saw play out in the House of Representatives, but in a much more, I would say, more like ballet movements rather than stormtroopers.
While we're spending time in the Senate here today, I'd love to get both of your thoughts on the official Republican response to Joe Biden's State of the Union address next week. This is the Wheaties box in politics, right? The Sports Illustrated cover. It doesn't always go that well. And they've tapped Senator Katie Britt, Alabama, for the night of the 7th. That'll be 10 or 15 minutes after the president responds. Jeannie, what do you think? Good follow on Joe Biden?
You know, I think I'm going to take a wait and see approach to this. I am thrilled that they tapped a woman from the Senate. But I think we'll have to wait and see, because to your point, other people that we have thought had promise, it's a very, very tough role. And, you know, it's something that some people have succeeded in, but more people have had, you know, tripped up, had bad experiences trying to do this follow-up. So it is thrilling that they chose a woman, but I don't know how this is going to go for her.
Ask Marco Rubio, ask Bobby Jindal. Rick, what do you think of the choice?
Oh, I think it's a brilliant choice. Youngest female Republican senator in history. She has a long history of working for Richard Shelby, Alabama icon. She's been around the track. She knows the game. Frankly, she's probably got more experience than most of the members standing in the well of the Senate. I think she'll do a great job, and I just can't help but be proud of an Alabamian getting that role to articulate this difference. Roll Tide.
Spoken like a son of Alabama. Well, almost at least. In Rick Davis and Jeannie Shanzano. They're going to be with us, by the way, on State of the Union night. They'll be with us Super Tuesday as well, because we've got some pretty heady stuff to talk about next week. Great panel. Thanks to you both. Rick Davis, Jeannie Shanzano. We'll see you a little bit later on Balance of Power, the late edition that starts at 5 p.m. Eastern Time. Kaylee, we're going to have to rest up this weekend.
Oh, absolutely. I don't know if we can rest enough this weekend to actually gear up for what is coming for us next week. Between Super Tuesday, State of the Union, yes, another government funding deadline since the can has been kicked, at least partially, to Friday, March 8th.
You make a good point. A week from today, we could be having this conversation all over again, even though there's technically 2 weeks involved.
This would be the 5th time.
That's correct.
Because there's been 4 stopgap measures. Maybe there'll be a 5th. Who knows? No one we've talked to from Congress seemingly has been eager to completely rule that out. Because that's how it goes here in Washington. But of course, Joe, a lot of what we have seen take place over the last several years has been shaped by a pandemic and emerging from the pandemic. That certainly is true of President Biden's administration. We were just talking about the State of the Union address he will give next week. When he came into office, we were still very much dealing with a pandemic in real time. Jared Bernstein was just talking earlier this hour about the economic ramifications that resulted, how the economy has recovered. It's a very different time now, though, in 2024, 4 years on, including now, if you get COVID, you won't have to isolate for 5 days. This is new today from the CDC.
Brand new today, having just come off a week. I'm always comfortable talking about this at the beginning. That's how I started my year, was with a week.
That's right.
And, you know, I probably was feeling okay before that week was over. And it's interesting that this is finally starting to shift.
Yeah, so if you have COVID symptoms, but they are improving and you've been fever-free for 24 hours without medication, you can go back to work, back to school, out in public.
Could you have imagined this a couple of years ago?
It's a totally different world. And of course, vaccines play a big part of this. And actually, Riley Griffin, a Bloomberg healthcare reporter here for us, was able to sit down exclusively with the CDC director, Mandy Cohen, and talk about these new guidelines earlier today. Here's a bit of their conversation.
We're seeing less deaths, less hospitalizations from COVID, but we want to make sure folks are using the tools we know work. That's why we've released these updated guidance, not just for COVID, but across respiratory virus like COVID, flu, RSV. And most importantly in those recommendations is get vaccinated.
And the recommendations suggest that if you are 24 hours fever-free without medication and you see your symptoms abating, you can return to life, to school, to work. Why now? What has changed? We haven't seen new guidance in a few years.
Right, so we are in a new place. So we were able to put out this updated guidance, again, because we're seeing less hospitalizations and less deaths from COVID. As we were still seeing high levels of viral spread. We have wastewater data that shows that there was a lot of COVID that was circulating this winter. But the good news is we weren't seeing any increases in those hospitalizations or deaths. And so with that continued trend over yet another season, we felt we could move forward. The other is we were also seeing that the folks who came to the hospital with COVID this season, 95% of them did not get an updated COVID vaccine. It made us want to reiterate how important getting vaccinated is to keep you out of the hospital.
Vaccine update in the United States continues to decline with each booster shot. So how are you considering the latest uptake numbers as you issue this guidance?
You know, we saw few folks get the updated COVID vaccine this past season. Now, it was slightly higher than the year prior, which is good, and we're hoping to build on those trends, but not as high as what we're seeing with flu shots. And we want folks to anticipate they're going to be an updated COVID vaccine as well as an updated flu shot later this fall. So get ready now for your updated COVID vaccine and your flu shot coming this fall.
Dr. Cohen, how do you respond to Americans, particularly those over the age of 65 or the immunocompromised, who may feel that this guidance leaves them more vulnerable to infection?
Well, I want folks to know who are at higher risk of bad outcomes from these viruses to know they were top of mind when we were putting together this guidance. We all know someone who is over 65 or immunocompromised. They're in my own family. And so I was thinking about them when we did this guidance. We wanted guidance that was simple and easy for folks to understand. More people are able to follow guidance that is simplified. And if more people are following that guidance, that means less viral spread and more protection for us all. In addition, we do have tools that can protect those that are most vulnerable. Vaccine, again, is the most important tool that we need to be using, making sure that folks are staying up to date with their vaccines. And then we released additional guidance for those who are over 65, for those who are immunocompromised, our disability community, pregnant moms, and younger kids. They're all special considerations that we want to make sure they're following as well, so we can keep those who are most vulnerable protected.
Throughout the pandemic, the CDC faced some criticism for mixed messaging around guidance. I wonder, is this effort to streamline for COVID, flu, and RSV an attempt to address those criticisms?
We've learned a lot of lessons through COVID. One of them is to have simple, clear communication. I think that's what you're seeing here. We're trying to help folks really prioritize what are the most important actions to take, and so that they can remember what to do no matter what they have. The reality is we know a lot of folks aren't getting tested when they get sick, and so we want them to have easy to follow guidance no matter what they have. Top line, though, continues to be get vaccinated.
That's an exclusive conversation you will not see or hear anywhere else today with the head of the CDC talking with our own Riley Griffin. Mandy Cohen making news there, Kaylee, as we mentioned a moment ago. It's just a different world now, but having listened to the conversation, it's the strain largely that has changed and brought us to this point.
And that people aren't getting as severely ill as they were initially, which probably is why they feel safe allowing people, once they no longer have a fever, to interact with other people. That was not the case until even recently. For 5 days, you said it, you've experienced this recently.
Lock yourself in a room.
You had to, yeah, exactly. Riley Griffin is here with us now, of course, conducted that wonderful interview with the CDC director. She's joining us live on TV and radio in our Washington, D.C. studio. So, Riley, whole new world. Is this about people just knowing, their bodies knowing how to react to COVID now? Because we've all had it probably multiple times at this point. Therefore, it just is less likely to be deadly. And that's what this is? Or is this the virus itself is just weak?
Both and. I think what we're seeing is that, yes, there are fewer hospitalizations, fewer deaths, even as cases remain high. But also the virus is changing, and while it remains transmissible, it's not as deadly as it was before. So those two things are working in conjunction, and that is why the CDC is comfortable today making guidance that might surprise many.
Just to understand, we're talking 24 hours without medication to return to work. That's until further notice. This is our new reality.
So it is 24 hours without medication like Tylenol, which reduces your fever. So if you don't have a fever for 24 hours without a Tylenol, that's process number one. And number two is that you're seeing symptoms abating. So if you're still feeling really crummy at home, you should stay home. But they're saying if you think you're looking on the up and up, and you don't have that fever for 24 hours,
so it depends on your status. You're still going to have people who are going out of work for a week or two because they have a bad case or they have a bad reaction. That's still going to be part of our world.
Exactly. And they are saying, make these decisions, keep in mind that over the 5 days after your fever reduces, you should distance if possible. You can mask, you can clean hygiene, right? take all the measures before, but there are no hard and fast rules anymore about 5-day isolation.
Well, and I'm sure we all know someone who had tested positive for COVID-19, completely asymptomatic,
That's right,
no
yeah.
symptoms to speak of. So this would essentially remove those people from needing to do anything at all, right? If you never showed the symptoms.
That's correct. And you're going to see people who don't like that guidance, who don't want to
Sure.
be sitting next to someone at work, particularly if they're immunocompromised, worrying about viral shedding.
And there's no masking or anything that comes with that.
The masking guidance that comes out today is basically that if you have contracted COVID and you are returning to the world, you should have a well-fitting mask.
Okay. Some things, I guess, don't change.
guess
You guys
that's
ever
true.
walk into a store or you're at an attraction or something and they still have the markings on the floor?
Oh, yeah. 6
From
feet
like a
apart.
6 feet, and you think, wow, what a blast from the past that already looks like ancient history. And it just got a little bit further in our rearview mirrors, I guess.
It's a new era.
It is indeed 4 years on. It's worth noting it took us this long.
That's right. Thanks for
to
bringing
get
that
here.
to us,
Riley Griffin, thank you so much. And great interview again with Mandy Cohen, the chair, director of the CDC. Now let's get an update on financial markets. As always, we go to Charlie Pellet with a check on that in New York. Hey, Charlie.
Hi, thank you very much, Kayla Lyons. We are pushing higher for the Dow, the S&P, and NASDAQ. Not just higher right now, best level of the day, and also a record on the S&P and NASDAQ. S&P right now up 35, up 0.7%. Dow Jones Industrial Average up 65. That is a gain right now of 0.2%. The NASDAQ Composite Index up 185 points now, higher by 1.1%. 10-year, 4.18%. The 2-year, 4.52%. Spot gold up $43 the ounce, surging 2.1%. Gold now at $2,087, while crude oil is up 2.4%, $80.12 a barrel on WTI. Bottom line here, best level of the day for the stock market. S&P higher now by 35, up by 0.7%. Balance of power continues. Yes, the Friday edition. Back we go to Washington, and once again, here they are, Kaylee Lyons and Joe Matthew.
Thank you, Charlie Pellet. And I guess the stock market was right. What me worry? The government shutdown? Bah, they always figure that out in Washington. And while they haven't figured it out, they did postpone it so we can all have our weekend. Kaylee, the lawmakers can go home. I keep saying we got 2 weeks. I guess that's true. We really got 1 week because next Friday we have to start worrying about it all over again.
Just for the first 6 package of the first 6.
The easy
because, again, this was laddered 2 steps. This is the new thing, apparently. But, yeah, March 8th now, new deadline for half of government spending, roughly. And then March 22nd, 2 weeks later, is when the rest of it has to be done. But this is the 4th time we've kicked the can down the road. Joe and I have spoken with many sitting lawmakers yesterday and in the days before who, when asked, is this the last continuing resolution we will see, have not given us a confident yes. Nobody seems to want to be taking that bet. And yet all the while, even knowing that we could be dealing with this come Friday, financial markets don't seem that concerned about what's happening down here.
Call me when I should care.
In Washington, exactly. And on that note, we turn to New York, Wall Street, where David Weston reigns king, host of Wall Street Week. He is joining us now in New York. So, David, we got through another funding fight that felt dramatic down here, probably felt less dramatic for those who are watching assets just keep climbing. No concern to be found.
As usual, Kelly, I think if you just got it exactly right, Wall Street, it just shrugs it off because we've just seen it too many times now. It's the boy crying wolf, and somehow it all muddles through. And I must say, having lived a fair amount of my career in Washington, I tend to defend our lawmakers against people who say, boy, they don't do their jobs, they don't get a job. But it's a little hard right now to take this much time and effort to come up with so little, because all they said is they won't shut the government right now. They are not addressing any of the underlying issues, even with the budget, much less the longer-term fiscal issues. I mean, they've really driven them apart. I don't think they're even a half step closer to fixing any of that, are they?
That would be a big no, it looks like. David, I'm pretty sure if somebody clocked in a 24-hour work week when you were running ABC News after coming back from a 2-week vacation, I think maybe you would have fired them. But we've got what we've got here, and I wonder if the market will have an opportunity to worry. We've got a minibus deal. Apparently, there are going to be 2 of them that will fund the government for the rest of the year, will avoid the sequester. But with this level of dysfunction, if nothing else comes out of Washington this year, even this tax deal that we were crowing about a couple of weeks ago appears to be fading to black. Is that a gridlock is good scenario, or is that Wall Street worried about our inability to govern?
Well, first of all, I have to issue a correction. In my 14 years at ABC News running it, I never took 2 weeks, ever. It didn't come close to that. I wish I could have. That never happened. But you remember we talked with Eric Cantor, the former majority leader, just last week about this. And he said, they call it dysfunction, but they come around to the right decision sooner or later. And now he's at Moelis. He's at vice chair of Moelis. And he said, you know what? Wall Street basically just doesn't believe they're going to really shut the government down, at least for any extended period of time. And by the way, in an election year, all of us know that is a pretty remote possibility because we've seen that play before and somebody gets blamed. Like, for example, Newt Gingrich, remember that? For those of us old enough, back in the 90s, he got blamed for that. It was not very pretty in the election.
That was quite a shutdown.
Indeed. Of course, we're not there yet. And actually, the headline literally just crossing the terminal that President Biden has now signed that stopgap funding bill into law. So the deed is done. There will be no partial shutdown.
I feel like we should have pyrotechnics in here.
Midnight tonight. I don't know about that. But clearly for now, the work is done. We'll resume it again next week. Speaking of work being done, or perhaps not, David, at the top of this hour, we were joined by Jared Bernstein, the chair of the White House Council of Economic Advisors, who never wants to talk about Fed policy, but was talking about the strength of the economy. And as long as the economy remains strong, it raises the question of why the Federal Reserve would need to cut rates. Why would we need easier policy if everything is chugging along? And I know that is something you spoke with one of the officials from the Federal Reserve this week.
The first question I asked Mary Daly, she's the president of San Francisco Fed, given how strong the economy seems to be, and Jared Bernstein certainly would echo that, why is it that most of the American people don't feel all that good about it? And she had a simple answer, which is it is inflation, particularly the aftermath of inflation. She thinks people were psychologically scarred. So this is the way she explained what's going on right now with the Fed and the residue of the inflation.
The way monetary policy works is actually you raise the interest rate, and that raises borrowing costs, and that slows people's spending, and then the economy settles down to a more sustainable pace, and inflation comes down. That's how the models work. That's how it empirically works over time. What's different this time is that consumers have just stayed in the game. They continue to spend. They continue to want to participate in the economy, and that's spurred growth, ongoing growth, and that's kept inflation a little bit higher for longer than we would have thought. But I still think overall the news is good. And yes, we absolutely see the challenges that families face when they have to pay higher borrowing costs. But we also know that what they really want us to do is bring inflation down. There is no place I go. I have a very big district, 9 states, but you can travel anywhere in the United States, hear the same thing. What's your number one problem? Inflation. That's what people are focused on, and that's what our job is.
That's what their job is, but it may not be helping Joe Biden in his re-election attempt very much to keep those rates up where they are. And there is the aftermath of the inflation that really has perhaps scarred people for a while. She thinks that'll go away with time, but right now she thinks that's the reason people seem to be dissatisfied with the economy that really is so strong in so many ways.
Well, it makes a lot of sense, and I'm awfully curious, David, to see how Joe Biden chooses to frame this next Thursday night in his State of the Union address, which reminds me, you're overdue down here in Washington, D.C. You anchored that thing last year, and I hope that we see you in the Capitol soon. David Weston with Wall Street Week that follows our conversation on Balance of Power every Friday. He starts 6 p.m. Wall Street time. David, good to see you. We'll be watching and listening here on Bloomberg TV and radio. Kaylee, we've got big news on Boeing we want to hit coming up.
Yeah, they might be buying Spirit Aerosystems, a company they split off more than 20 years ago. We'll have the detail.
listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome back to Balance of Power, live on Bloomberg TV and radio from Washington, D.C., where the CEO of Boeing has spent a pretty good deal of time in recent months because Boeing continually seems to be in the news after, of course, that fuselage door blew out on that Alaska Airlines flight, raised a lot of questions about the manufacturing of Boeing's 737 line. And, of course, a lot of Boeing manufacturing and supply parts come from Spirit Aerosystems, a company Boeing spun off back in 2005. We're talking roughly 20 years. And now, Joe, apparently they might be looking to bring it back into the fold.
Well, I guess so. Yeah, this was part of Boeing. This was the division of the company that made the fuselage. Now it's a standalone company. And while David Calhoun, to your point, was here in Washington meeting with senators, talking with the FAA, he was also walking the floor at Spirit to try to find out what in the world went on, even as he took responsibility, took the blame for what potentially was something that came out of the Spirit manufacturing center there, the Spirit factory on the 737, and that's what we wanted to talk about with George Ferguson. He's done such a great job covering this for us, our senior aerospace defense airline analyst at Bloomberg Intelligence. George, thanks for being with us. When Dave Calhoun was walking the corridors on Capitol Hill, was he being encouraged to do something like this?
Well, I mean, he was being encouraged to do whatever it took to improve quality at Boeing. I'm not sure that they were directly encouraging him to take Spirit back into the fold. But, you know, look, I think that Boeing took a cold, hard look at what it would take to improve quality on builds for the 737. And my guess is when they looked at Spirit, they thought being on the outside and not having more control was going to make it really hard to keep quality up, especially at a time where they can't really afford any more quality problems. And I think that was, you know, probably the, that was the ultimate decider that, look, they had to get in there and take it over. Or at least that's what's being reported, but that's the logic behind, I think, what's going on.
Yep.
So if this is about trying to make quality better, something that regulators have said they would like to see from Boeing, is this likely to run into any regulatory difficulty if they do indeed decide to pursue this purchase?
We do have an administration that doesn't seem to like, any level of consolidation.
Right.
But Boeing accounts for over 50%. I think the last number was roughly 60% of Spirit revenues. My analysis is even more of their profitability, because the high volume programs, the highest volume program is going to be the Boeing 737. And so I think that when the administration looks at this, they'd say it's going to be for the better of American aerospace. They're going to say, look, these two companies are already really well intertwined. And I think the company, right, Spirit does a bunch of work for Airbus. They do it on the A220, the A320, which is their big money maker, and the A350. I think Airbus isn't going to want that inside Boeing. And so I think you're also going to see that maybe some of the more competitive portions of the Spirit business are going to go outside the company, and that probably makes the administration feel better as well.
That's fascinating. I suspect anything in the name of safety here could push this deal through. George, does Spirit want to be bought?
I think that I don't think they're going to resist, I think is maybe the right way to put it.
Well, their lives could be made better. I wonder if that actually helps them manage quality on their end, if they see that as an improvement.
Oh, I do think it's going to make their life better, right? And I think part of why we got here was because, Boeing in their quest prior to the MAX crashes and groundings right before the pandemic, is a long story here. Part of their trying to build better profitability was all about pushing suppliers to bring the components of aircraft at lower prices. And Spirit got caught up in that, right? And so the profitability for Spirit has been horrible over the last bunch of years as they've managed much lower build rates. Pulling Spirit inside Boeing eliminates that avenue for a way of, saving money at Boeing. And so I think it does make the life of their workers better, the life of management easier. They'll still be under senior management's drive to make things cheaper all the time. but they're no longer an outside supplier where the squeeze can really be put heavy on them, under the threat of going somewhere else. And so I think it does make their life better, and they won't resist.
All right, George Ferguson, Senior Aerospace Analyst at Bloomberg Intelligence, thank you so much for joining us. I always love to look at the supply chain analysis function on the Bloomberg terminal. It's one of my favorite functions, SPLC Go, and it will show you that Spirit Aerosystems gets 64% of its revenue from Boeing.
You'd think that's like a free pass to buy the thing, right?
Just, absorb it.
It's like getting remarried.
I guess we'll find out. It's a story we will continue to follow, and I'm sure Carol Masser and Tim Stenovic are following this as well.
Right.
SPLC, you guys know that function, right?
Can
It's
I
one of
just
my
tell you
favorites.
something? During your conversation, I was like, Carol, I wonder how much revenue Spirit gets from Boeing. And Carol was like, just go to the supply chain function on the terminal.
SPLC is
And
my
then
favorite
seconds
function.
later, Kaylee, you say it on air.
In a snapshot, right?
It's a
know what they
mind
say
melt.
about great minds.
You know
Yeah.
who buys from them, you know who they sell from, who their biggest customers, and you know who their competitors are. It's just a killer function. Anyway, we're going to talk.
I love this.
Just real quickly, a tease. It's one of the most read stories on the Bloomberg. Torsten Slok says, "Yeah, Fed, you don't need to cut rates this year." How do you like that?
We tried to ask Jared Bernstein,
Yeah,
the
he
White
didn't
House
wanna go
Council of
there.
Economic
I
Advisors, how
heard.
he liked that. No real comment from the chairman.
We're still waiting for that answer. Carol and Tim, have a great weekend. We'll be listening from Washington. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week, live on radio, TV, YouTube, Bloomberg Originals. Carol Masser along with Tim Stenovic. And let's get to the setup at this hour on this Friday, March 1st, 2024, the first trading day in March here. And we've got an equity rally, Tim, underway.
Yeah, we're off to the races, I think it's fair to say. The S&P 500 up 0.8%. The NASDAQ composite up more than 1.2%. The Dow up 0.25 point.
You know, bonds are also up and yields have backed off, which is why we are looking forward to getting into a conversation with Torsten Slok. The new Fed narrative, you know what it's been. All of a sudden, folks are saying, well, wait a minute. Maybe we're actually not going to get any Fed rate cuts this year. Maybe we could even get an increase. Well, that's what Apollo's Torsten Slok says. He says the Fed does not need to cut rates this year, so we'll dig into that with him.
Yeah, also shares of New York Community Bancorp plunging to their lowest in decades. This as it flags weakness when it comes to loan oversight. Also, getting a new CEO. We're going to dive into what's going on with New York Community Bancorp.
Yeah, and that commercial real estate exposure, specifically when it comes to multifamily housing. Hey, and on the way out, just take some notes here. Anti-racist, unconscious bias, and a few other terms. The corporate speak about diversity is getting an update. We're going to break it down for you exactly what is going on.
Hey, first up, before all that, let's get a check on the trading day and business news. Here's Charlie Pellet.
Thank you very much, Tim. And first trading day of the new month, stocks are marching higher. We've got the S&P 500 index up 40 right now, 51.37. That is a gain now of about 0.8%. Dow Jones Industrial Average up 98 points now, higher by about 0.3%, while NASDAQ is up 199 points, up now by 1.2%. 10-year 4.18%, with a 2-year that's yielding 4.53%. Spot gold up $45 the ounce, surging 2.1% right now, $2,085 on spot gold, while West Texas Intermediate crude up 2.2%, $80.02 for a barrel of WTI, back above $80. Boeing, as we have been reporting, is in discussions to acquire Spirit Aerosystems Holdings, a move that would reclaim control of its struggling former aerostructures unit and the main supplier at the center of numerous quality issues affecting the 737 MAX jets. Spirit up 14.5%, Boeing now lower by 1%. Again, recapping, stocks higher, S&P up 41 right now, higher by 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, so appreciate it. Charlie breaking down some of the top stories and the market trade. Let's talk a little bit more about it. because we do have U.S. bonds climbing, disappointing factory data, declining consumer sentiment, solidifying some of the bets that are out there on interest rate cuts, with traders also sifting through the latest remarks from a slew of Federal Reserve speakers. There's been a lot this week, Tim.
Yeah, in particular, U.S. two-year yields extending their slide after Federal Reserve Governor Christopher Waller said he would like the central bank to boost its share of short-term treasuries.
Yeah, and traders slightly boosted their bets on a Fed rate cut come June. All right, our next guest, though, says the Fed will not cut rates in 2024, joining a growing chorus of Fed watchers from former Treasury Secretary Larry Summers to Wall Street strategists over at Citigroup. So his note to clients, it's all in a story that is among our most read. I think it's number 3 right now on the Bloomberg, but it's been atop the list for most of the day. Let's get to our interview, and we welcome back Torsten Slok. He is Chief Investment Global Management Chief Economist and partner over at Apollo Management, and he joins us from New York City. Torsten, so
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
More tailwind to consumer spending because now the wealth effect is higher because of stock prices going up and credit spreads being tighter. All that should mean that we are delaying Fed cuts, and therefore we will probably have now a few more quarters of strong growth before we begin to see any meaningful slowdown.
well, and I want to get to some of the slower points we are seeing, maybe in terms of the U.S. economy. But having said that, first I want to ask, why put a time frame on it? Why say it's not going to happen this year, especially when there is still a fair amount of uncertainty about the economy and its behavior and how we kind of get towards the end of maybe a cycle?
Well, that's a good question, Carol. But if I, on my Bloomberg screen, type ECFC go, you get to see the economic consensus expectations to the U.S. economic outlook. And if you look at how expectations have evolved for growth in 2024, you have literally seen since the Fed pivot in the meeting on the 13th of December that growth expectations for the U.S. economic outlook for 2024 have really gone up dramatically. And that's telling you that the consensus is beginning to come around to the view that maybe there is no near-term slowdown. And therefore, the timeline really here is that if there is no near-term slowdown, and if we still have financial markets doing so well, well, then it is probably going to take a few more quarters before the Fed succeeds with getting inflation back to 2%. So the short answer to your question is that I still think that with financial conditions being as easy, or in plain English, with the stock market hitting new highs all the time, it's just really difficult to see the Fed begin to cut rates when you have the S&P at all-time highs every day. Because think about what that would do to the S&P, what it would do to financial conditions. It would ease them even more, and that would raise the risk for the Fed that you would get even more upside pressure on inflation, which we already have from wage inflation is still very high. You also have that NFIB survey of selling price expectations for firms, also still very strong signs of inflation in the pipeline. And finally, you also have a number of indicators across the board for labor markets, for what's going on in terms of ISM, prices paid, services, manufacturing. All that points to more inflation pressure.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence, I did that all in one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
That higher interest rates have resulted in an increase in delinquency rates on auto loans, an increase in delinquency rates on credit cards, in particular for households that have more leverage. Likewise, higher interest rates have also resulted in an increase in default rates for loans and also in a default rate for high yield. But note, this is mainly hitting higher levered entities such as highly levered and highly indebted households and highly levered and highly indebted firms. But those are still a relatively small part of the overall macro picture. The big picture still remains that in IG, companies are still doing well. In prime, when it comes to FICO scores for consumers, people are also still doing quite well. So with this tailwind from the stock market going up, from home prices now going up again, also likewise from credit spreads tightening. And remember also anyone who owns fixed income are getting higher cash flows. That's also supported for consumer spending.
But
all those things on the scale still weigh more heavily.
Totally get it, Torsten, but isn't it fair to say that higher for longer is could potentially put the Fed at risk at overdoing it and create ultimately certainly tighter financial conditions out there, more stress on consumers that could ultimately play out in a wrong way? Like, isn't there like kind of the tipping point where you get a little worried about the Fed staying too high for too long?
Absolutely, and that's why, again, if I type ECFC, go on my Bloomberg screen, look at the upper right-hand corner, it will show you the consensus expects a 45% probability that we will have a recession in the next 12 months. 45% likelihood of a recession in the next 12 months. Think about how serious that is from the consensus. Is exactly saying, Carol, to your points, that there is a lot of worry that ultimately all the effects, the lagged effects of the Fed raising rates are going to come and bite us, and it will be slowing things down. But where we're sitting right now, the reality is just that is still now being pushed further out. And that's why I think we have to get all the way into 2025 before we begin to see the more meaningful impact of the Fed raising rates. Essentially, when markets are now coming to the conclusion that we should see the stock market go higher, we should see credit spreads go tighter. If that's the case, that will continue to be a strong tailwind, both for people who own fixed income, but also for people who are in the stock market and seeing bigger wealth effects.
Torsten, are you ready to say that the next move from the Federal Reserve or the Fed could even raise rates at some point this year? Is that on your agenda?
I'm not. Yeah, that's a very fair question. I'm not quite ready to see that. I saw on Bloomberg that Larry Summers was saying that there was a meaningful chance that maybe the next Fed move could be a hike. I think that the Fed will still rather just wait where they are. There's also something about doing that in an election year and doing that in a way that will send a really strong signal to financial markets. Why not just keep rates at these levels for a good deal longer and until the end of this year? And then once they begin to see that financial markets begin to settle down, inflation begins to settle down, and we do begin to see the economy slow, then they can begin to effectuate all the rate cuts that we now have been expecting literally since the beginning of last year. Because as you know, of course, all too well, we went all in the market and the Fed and the consensus into last year saying, oh, we'll have a recession, we'll have a recession. That turned out to be wrong. This year, oh, they will cut 6 times, they will cut 7 times, and that also turned out to be wrong. So again, we shouldn't make the same mistake we've made now for 14, 15 months.
Right.
Let's just look at the data, and the data is pointing still towards that this economy
So you're
is just
data
not
dependent
quite
like the
yet
Fed,
slowing down.
basically, right? Is that what you're saying?
My 10 charts in the note, Carol, shows you the data risks in the regional banks because
increase rates this year, not just hold them steady.
Well, then
but
I do
keep
think we
them-
have to talk about some other things that you also always, of course, discuss so well, namely, then we might begin to think about, are there some risks in the regional banks because of commercial real estate? Are there some risks because China is slowing down in a fairly rapid rate? Germany, Europe is also slowing down. So could it be that global growth could also be a source of why we might get a slowdown later this year? It could also be more broadly geopolitical risks of all types of forms, including political risk in terms of what outcomes are of elections around the world, including in the US, could also be something that could either create upside or downside to the outlook. So I see those, I would in summary say those three things are likely the three risks that I worry about why we could have a faster slowdown, namely, again, the regional banks and commercial real estate. Number two is the global growth picture is not looking very good and slowing a lot faster than what we're talking about here for the US. And finally, geopolitical and political risk more broadly as uncertainty factors is also something that could potentially have an impact on the outlook for the next several quarters. But that's just not what we're seeing now.
Torsten, I want to go back to, and I know, I think you were catching up with our Mike McKee at an event today, or talking with him, and he was sharing with us, just this whole idea of being, the Fed staying too long at the higher for longer party, and that the Fed, how much of a risk is it that they find themselves at that point where they over tightened? Mike reminding us, everybody reminding us that when recessions come on, they tend to come on really quickly. So how much do you think about that risk, and also, that 2% target? How committed do you think the Fed is ultimately to that 2% target? Is it time to really rethink that?
Yeah, no, this is all really important. I do think that we have had a pivot party. Financial markets have been partying after the Fed pivot, but I don't think that this pivot party was initiated by the Fed. This was not the Fed's idea that financial conditions should ease. They were simply observing that maybe they didn't have to raise rates as much as they thought at the September meeting. So they came in December and said, well, maybe we now can begin to think about later sometime in 2024 to cut interest rates. But nevertheless, financial markets overinterpreted that and literally had, again, a pivot party where they said, but that's green light for risky assets, that's green light for the stock market to go up, that's green light for credit spreads to tighten. And that tailwind that has been created might actually have surprised the Fed, because that tailwind is now the reason why the Fed may now have to swing the pendulum back in the more hawkish direction. As you hear from FOMC members in the last several weeks, they're now stepping back and saying, well, maybe we now have to wait a little while longer and we'll definitely not get a cut in March. So now many of them are saying, well, maybe we'll get a cut in the second half of this year. But that's what I'm saying. Maybe they'll have to push that further out if financial conditions to continue to be so easy.
Torsten, given what you're saying about what the Fed's going to do this year, do you think the equity markets and the rates markets are mispriced right now?
Well, I do think definitely that the Fed Fund futures, or SOFR futures, as it's called now, of course, that they are pricing in too many cuts. I simply don't think we'll get these cuts because the economy is just simply not slowing down, period. And the other issue is, of course, that if it's not slowing down, then inflation is just not back at the 2% target. Several of the charts that I sent you this morning, they focus on that number of the leading indicators, both from manufacturing prices paid, services prices paid. Also, when it comes, and we saw that in ISM manufacturing prices paid this morning, continue to point to more upward pressure on inflation. Likewise, from the NFIB.
But we did see U.S. factory activity shrink at a faster pace in February. We did see that, which is concerns about some weakness in manufacturing.
Understood, but manufacturing is still only about 10% of the economy, so it's the service sector that still continues to do well. And there's a lot of discussion, which is all about, oh, is this just a statistical artifact here in January in the statistics for inflation? But the problem with that is that then you also need to argue that this was also just some statistical fluke in employment, because non-farm payrolls at more than 300,000, that was a really strong number. It's also telling you that maybe there is some tailwind. So we'll see next Friday when we get the next non-farm payroll, how strong the tailwind is. But ECO go on Bloomberg tells me we still have a tailwind on job growth. That makes me worry about still growth is actually still quite strong.
Torsten, very quickly, 25 seconds. So what's key for you and Jay Powell next week? Very quickly, just briefly.
Well, I would expect him to swing the pendulum back in the more hawkish direction. I think that they have been surprised at the FOMC, how markets have been, again, doing their pivot party and rallying on the top of actually a relatively modest change in Fed communication. So they would probably now say, well, the Fed communication has to swing back in the more hawkish direction after the dovish move they had in December.
Listen, so appreciate you spending some time with us. Apollo Global Manager, Chief Economist and Partner, Torsten Slok. Do want to mention a headline crossing. President Biden announcing that the United States will begin airdropping humanitarian aid into Gaza, joining other nations in a bid to relieve increasingly dire conditions wrought by the Israel-Hamas war. So this decision marking a shift that acknowledges current efforts to get supplies there have fallen short in addressing the need and the crisis. This happening today from the White House.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at records on the S&P 500 index and the NASDAQ Composite Index. Right now, we've got the S&P very close to session highs, up 41 points to 5138. That is a gain right now of about 0.8%. The Dow up 105 now, higher by 0.3%. The NASDAQ Composite Index is surging 205 points. Another tech-fueled rally, up 1.3%. NASDAQ at a record, bringing its year-to-date gain in this very young year to 8.5%. To put that in context, We've got the S&P up by 7.6% so far for 2024. 10-year, 4.18%, with a 2-year right now at 4.52%. Spot gold today up 2%, $2,085 the ounce, while West Texas Intermediate crude oil is up 2.4%, $80.17 for a barrel of WTI. Crude prices, by the way, hitting $80 for the first time in almost 4 months, boosted by continued signs of strength in markets for physical barrels of oil. Among some of the oil majors, ExxonMobil up 1.2%, ADRs of BP up by 2% right now, and Chevron higher by 0.8%. Recapping, S&P trading at a record, up 41 points, best level of the day right now. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So certainly top of mind and among our most read on the Bloomberg, and it has been since last night as we got that news after the closing bell. But we're talking about the commercial real estate lender, New York Community Bancorp, shares here hitting their lowest since 1996, down about 30% at its lows today after the news last night that the company discovered material weaknesses in how it tracks loan risks. It wrote down the value of companies acquired years ago and replaced its leadership to grapple with the turmoil. A lot to unpack here, Tim.
Yeah, the bank also has got a new CEO. Alessandro Danilo will become CEO effective immediately, succeeding Thomas Cangemi. The company expects to miss a deadline for filing an annual report as it shores up controls.
Yeah, and the KRE, because we like to kind of broaden out, see what the rest of the regionals are doing. The Spider S&P Regional Banking ETF also slightly lower today. It was down a little bit more than 1%. But we wanted to dig into this company and see if contagion is once again a concern. So with more on New York Community Bancorp and the group and its exposure to commercial real estate, we are grateful to have with us once again our Bloomberg Intelligence Senior Analyst for U.S. Regional Banks, Herman Chan, here in studio. How dire is this news about New York Community Bancorp? Investors feel pretty bummed out here.
Right. So it does raise a lot of questions and further questions for New York Community, the management team. It has a lot on its to-do list, right? So before yesterday's announcement on the material weakness, we were focused on shoring up their capital, reducing their exposure to commercial real estate, and bolstering their management team, making sure the deposits don't leave and making sure their employees don't leave. Now you're adding on this other issue with a material weakness that they flagged on their internal controls. It looks like that weakness is not going to drive further provisioning for their 2023 results. So that's good, but it doesn't really say anything about future provisioning for bad debt in their commercial real estate. So that's an ongoing concern.
Talk to me about the idea of deposits leaving the bank. I mean, this is a bank that owns Flagstar as well. And the fact that it's not called New York Community Bank is probably an advantage to the people who are at that bank, because I'm wondering if consumers even realize that the parent company of their regional bank is struggling like this.
Right. So that's an interesting point. They have a model where they have their bank branches that were named not New York Community, but other names like Roslyn Savings and others. And they recently revamped the entire franchise to be Flagstar. So all the branches going forward are now named Flagstar Bank. So one other thing I would note is that their deposits, there's a very small sliver of their deposit base that's uninsured. And so that is a defensive measure, right? Because with SVB, 95% of their deposits were insured, and then they subsequently left.
Meaning those deposits were over the FDIC limit at that time last year. So to what extent should investors be concerned about deposits actually fleeing the bank? Do we have any indication that that's happening yet?
Right. So they did offer an update earlier in February that showed their deposits actually increased from year end. But that update didn't incorporate the Moody's downgrade, and they failed to update it during their most recent disclosures over the past couple of days. So we still don't know how the deposits have reacted over the past few weeks.
How do you as a bank have material weaknesses in how you track your loan risks? Isn't that what your business is?
It is. So it's really discouraging to hear that. And I think that's one of the reasons why their chief risk officer and their accounting executive left last year, because they needed to shore up their capabilities on that front.
Yeah. I'm just like, that's what you do, right?
Right.
I mean, if you can't kind of keep on top of that.
And they historically also had very low reserves to their multifamily and office loans. So I think that had something to do with it as well.
Well, talk to us about the multifamily exposure here. We have a great chart to kind of show everybody and how New York Community Bancorp compares with some other names that are out there: Bank United, M&T, Webster Financial, Customers Bancorp. I mean, NYCB has a much bigger exposure here. Talk to us a little bit about that.
Right. So they are the go-to bank for rent-regulated apartment lending here in the New York area. That's their bread and butter business. They've been doing it for decades. They dominate the business. But rent-regulated apartments have been struggling over the past few years, ever since a 2019 law from New York that really restricted the rent increases that landlords can do. So it's really reduced the value of those apartments, and coupled with the fact where interest rates are today, it makes for a tougher business model going forward because the cash flows are really impaired.
So does that mean that New York Community Bank is unique in its exposure there? So the contagion question, once again, is really contained to New York Community Bank?
That's right. So I think that's what the market is telling you, because the rest of the banks are really trading fractionally down, maybe over 1%. So the market has realized that this is a New York community-specific issue, and there are no other banks within other large regional banks that really have that multifamily rent-regulated exposure.
All right, so that's good to know. So for a little bit, so it sounds like it's very company-specific. Let's talk about the new CEO that's taking over, brought in for this turnaround. Successful run at Flagstar Bancorp. As you said, that's now really the company that's in charge. He was there for a long time, was really good there. What do we know about him? What skills does he bring to maybe change the risk profile, or at least the risk awareness, and making sure the right systems are in place?
Yeah, so he has done a great turnaround, with Flagstar. It was a troubled institution at one point, and he was able to really shore up their issues from the regulatory front. There was an OCC consent order, which the management team was able to lift, and then subsequently it was sold to New York Community as a way to diversify New York Community's multifamily concentration. So it was clear in February when they did a update call with the street that, and Sandro, the now CEO, he was lifted to executive chairman, and he led that call. So it wasn't a surprise that they made this CEO change.
But what could NYCB do given its exposure to multifamily rent-regulated apartments?
Yeah, it's a tough spot.
Because it's not like new leadership necessarily could change that.
Right. There's nothing in the immediate horizon that they can do to change that. There's not a lot of demand for that business and that lending because of the issues that we described earlier. So they're going to have to manage through it, make sure their deposits don't leave, and increase their capital quarter by quarter.
Herman, do you think there's a chance that the federal government needs to come in and save this bank?
It really depends on the deposits, as we mentioned earlier. As long as they have liquidity and they don't have a bank run, which we have no indication that that's happening as of right now, then they can just sort of muddle through over the next various several quarters.
Again, that's not in their control.
Right.
That's in the control of their depositors.
Right.
And if, as we saw a year ago, if depositors get freaked out, then they run.
Right.
I guess their messaging is in control, like they can communicate with their depositors, but if people get scared, they can pick up their phone and make transfers very quickly.
Right, and their depositors are these large landlords in New York City that own these multifamily properties. If they get freaked out, then it becomes a bigger question. But as of right now, it seems like they're seem to be placated by the actions of the bank.
But it does sound like that until they get out of this business, that this is going to be an overhang, right? So that's longer term, that they've got to figure a way to unravel themselves from it.
Right. So that's been one of the priorities when they had their fourth quarter earnings call, is to diversify their way out of multifamily. But it's easier said than done.
Yeah, sure, because everybody knows what the rules are now, right? Like who ultimately wants it. Hey, just got about a minute left here. Who, since we've got you here, that you continue to keep on your orbit when it comes to some of the regionals? Because this conversation, just when we think it's kind of calmed down, something creeps up and it's back on our radar.
Yeah, so the banks that have higher concentration in commercial real estate have been flagged by the market. Banks like Valley is one that seems to pop up a lot, but it seems like at this point it's more New York community specific than anything else.
If Torsten Slok is right and we don't get any Fed rate cuts this year, is that going to be maybe problematic for some banks that are still out there, some of the regionals, just quickly?
Yes, it would be problematic, first on credit quality because higher refinancing costs. It'll hurt companies like New York Community when these loans come due. And then we need lower interest rates to really spur some loan demand, which has been anemic for the past several quarters.
All right, great stuff. Always appreciate it. Our Bloomberg Intelligence Senior Analyst for U.S. Regional Banks, Herman Tan, joining us here in studio. Shares of New York Community Bancorp, Tim, still down about 24% here.
Hey, coming up next, the new reality around diversity, equity, and inclusion, also known as DEI. Here's a little hint. Don't say anti-racist or unconscious bias. We're going to explain the conscious uncoupling from DEI language after this.
Things are changing, definitely. That's no doubt about it. This on a day, just a quick check on the markets. You've got a rally underway. And right now, folks, we've got equities pretty much, Tim, at their best levels of the day.
Hey, let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 991 newsroom in D.C. Hey, Nancy.
Thanks, Tim. The government is changing the guidance for COVID-19 and respiratory illnesses. The CDC now says if you are fever-free for 24 hours without medication and your symptoms are subsiding, you can return to work or school. CDC Director Mandy Cohen explains to Bloomberg why they're making the change.
We are in a new place, so we were able to put out this updated guidance, again, because we're seeing less hospitalizations and less deaths from COVID.
CDC Director Mandy Cohen also says 95% of people who went to the hospital with COVID this season had not received an updated COVID vaccine. Under a heavy police presence, thousands of people said their goodbye today during the funeral for Russian activist Alexei Navalny. He was buried on the outskirts of the capital after a short Russian Orthodox ceremony. His mother was there, but his widow, Yulia, did not attend the funeral after aide said it would be unsafe. President Biden says in the coming days, the U.S. will begin airdropping humanitarian assistance into Gaza. The decision follows the deaths of dozens of Palestinians yesterday when the trucks were making a delivery. A New Jersey businessman is signing a cooperation deal and pleading guilty to trying to bribe Senator Bob Menendez. The senator and his wife face corruption charges and go on trial in May. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
from Bloomberg World Headquarters, I'm Charlie Pellet. 2:40 the time right now on Wall Street. We do have stocks and records with the S&P continuing to push higher now at 5135, up 39 points. That is a gain there of 0.8%. We've got the NASDAQ Composite Index up 185 right now, higher by 1.1%, while the Dow Jones Industrial Average is up 73, up by 0.2%. Bonds climbed as disappointing factory data and a decline in consumer sentiment solidified bets on rate cuts, with traders also sifting through the latest remarks from a slew of Federal Reserve speakers. 10-year at 4.17%, the 2-year 4.52%. Spot gold up $41 the ounce now to $2,086, up by 2%, while West Texas Intermediate crude oil is up 2.2%, just about $80 a barrel. Boeing is in discussions to acquire Spirit Aerosystems Holdings, a move that would reclaim control of its struggling former aerostructures unit and the main supplier at the center of numerous quality issues affecting the 737 MAX jet. Boeing shares, they're down right now by 1.4%. Spirit Aero surging 14.3%. Again, recapping, stocks higher. S&P trading at a record up 39 now, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. Well, the anti-woke movement is making its way into corporate speak. Tim, not sure if you've noticed.
I have to confess I have not noticed.
Well,
because I have not been reading all the 10Ks that our next guests have been reading.
What is wrong with you?
I don't read 10Ks at night.
Apparently not. Well, terms such as anti-racist and unconscious bias are being dropped on the editing floor when it comes to corporate filings and some very well-known companies, Tim.
Similar edits are getting penciled in at a wide range of companies as businesses, big and small, grapple with the conservative backlash against diversity initiatives. So writes the Bloomberg News team of Jeff Green and Simone Foxman. Both are Equality Team reporters. Jeff joining us from Detroit this afternoon. Simone here in the Bloomberg studio. Jeff, I want to start with you and just take a step back here. How did this whole thing get on your radar here? Because I think small changes within 10Ks are not necessarily something that people pick up on.
Yeah, well, one of the reporters mentioned it in one of the companies he was covering as an aside, and it wasn't that big of a deal in the company he cited, but I figured I would take a look, and the more I looked, the more I found, and some of these were terms that have been just standbys, boilerplate, if you will, for several years, and they were dropping out of the filings, and I thought that was really interesting. And as the list grew, it became even more interesting. And it wasn't just nights; it was also weekends to find all this stuff.
Not just nights and weekends.
Okay. Well, what specifically? Talk about some of these terms, because I feel like we've all been using them a lot over the last couple of years. Certainly coming off the pandemic, certainly coming off the death of George Floyd. Talk to us a little bit, dig a little bit deeper for us, specifically what they're dropping, what they're not writing about or including in any of those official filings.
Things like allyship, mandatory allyship training, that was one that dropped off. Anti-racist is one we highlighted because Uber didn't say we just want to not have racism. They said we want to become an anti-racist company. They said that for 3 years in a row. So when it dropped, it seemed notable. And that is one thing to be aware of. This is not like a company used the term 1 year and then the next year they didn't. Most of the time, this was 2 or 3 years of the same wording, and then suddenly it was changed. I used that criteria, in fact, Simone and I both did, to make sure we only looked for stuff that seemed to have been a pretty significant change. So this was something that we felt like was on purpose, even if the companies aren't admitting it.
Okay, so Simone Foxman, come on in here. If this is on purpose, why is this happening? What are the external or internal factors that are causing companies to change their language around this stuff?
Well, certainly we live in a political environment where there is a lot of blowback against these 3-letter acronyms, DEI and ESG. So there are people out there who are, looking at these companies and what they're doing and likely to raise a stink. But even more importantly is the affirmative action decision that the Supreme Court put forward back in June. And lawyers and consultants really tell us this has caused companies across the board to go ahead and look at their DEI policies and determine whether they're still legal. Because even though the affirmative action decision really catered very closely to schools and universities, everyone that we speak to really believes that there is going to be at least some crossover into the corporate world.
Well, Simone, the worry here, right, is lawsuits also about the company, right?
Absolutely.
And being targeted in an environment where companies are targeted by either politicians or just individual consumers and so on because of what they say are their woke policies.
And plenty of various firms have been under legal fire. I mean, you look at AFL, America First Legal. This is the organization that I guess is the front man is Stephen Miller, has gone after the likes of Disney for some of its policies, has gone after Edward Bloom, who was part of that decision, who was behind the Students for Fair Admission that sued Harvard and University of North Carolina, very publicly suing a lot of law firms that then themselves go ahead and advise companies, you need to be more careful about your language. So some of what we're seeing here is definitely companies just saying, let's narrow this in. Let's try and make things more vague. We don't need to put it all out there. And I should note, all these companies really are saying to us, we still are going ahead with our commitment to diversity and inclusion, but what they're writing in these heavily lawyered documents is just different, and we're trying to figure out exactly what that means going forward.
So pick up on that, Jeff, because that's what Simone ended with is what I want to ask you. Is there any indication that companies are actually acting different in terms of their policies or the way they're hiring or the way they're managing based on this language change?
Yeah, majority of companies seem to still be doing what they want to do, just trying to not make it so evident. And there has been some sloppiness. This is not just, some of this is actually good for these companies to take a harder look at what they've been saying and what they've been doing, because it has just sort of been free up until recently. You could kind of say and do whatever you wanted because it just was seen as doing good, to do well, and all those sorts of things. And now there's a little more scrutiny. But so far, it seems like where companies are actually changing their activities is on the margins, or with companies that really weren't very serious about it in the first place. Maybe they jumped in after George Floyd and they just kind of were trying to see what would work, and it wasn't really working for them, those sorts of things. But by and large, at this point anyway, it doesn't seem like there's a wholesale change in how big companies are approaching DEI. And it could be different in 5 or 10 years if the U.S. Supreme Court hears a case specifically about how businesses should operate.
I want to ask this to both of you. And Simone, let me ask you first. I mean, how willing were companies to talk about this with you guys? Or I'm assuming not much?
Extremely unwilling. It was some of them did comment. I should point out, and we have this in our story, we offer some detailed descriptions of some of the commentary they made, and plenty did say, this language changed our 10K, but it's still a policy we do. That said, I think no one really wants to stick their neck out on anything related to diversity and inclusion right now, and we certainly heard that from companies.
Well, so Jeff, how about you come on in on this? But I mean, I feel like also net what you guys said is that even if they're dropping it from those official corporate filings, they're still pursuing their strategies when it comes to DEI. They're not backing off of them.
Yeah, it was kind of interesting. I got a sense after looking at close to 110Ks that there's also some sense to streamline them in general, like take some of the words out, have smaller statements about not just this, but other topics. And I also think, like in a couple instances, they took the information out of the 10K and maybe moved it into a specialized document that was more focused on the topic to basically maybe put it into a smaller audience.
Jeff, does this mirror what's happening in terms of other parts of companies right now? Like, are you starting to see this show up in any of the statistics that you track over at Bloomberg Equality?
Yeah, if you look at if there's a chart in the story, if you happen to have access to it, that kind of shows the trajectory of just mentions of DEI and diversity on corporate calls and in other sort of public-facing pronouncements is clearly on the decline as well, which is one of the reasons we anticipated it would show up in corporate filings.
Yeah, it is pretty worth checking it out at Bloomberg.com or on the Bloomberg to see what's happening. Just interesting to see how the pendulum swings in terms of companies, especially when it comes to what they put out publicly. And it'll be interesting to see ultimately where it all settles maybe over the next couple of years.
Also notable, I think it's happening during an election year, and people seem increasingly polarized as we head into November.
Yeah, exactly.
And this stuff is polarizing.
Yeah, absolutely, and can certainly sway maybe how people vote ultimately. All right, guys, thank you so much. Really appreciate it. Jeff Green and Simone Foxman of our Equality team, both reporters on that space. Just head to Bloomberg.com to read the whole story and check out more of their reporting. Also, you can find it on the Bloomberg terminal. All right, our thanks to the team. Coming up next, though, Options Insight with Bloomberg's Abigail Doolittle. A little bit of market talk on this day when we're seeing equities up and yields backing off a little bit. This is Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Dell Technology shares, they're now up 31.4%. Dell is surging after reporting better than expected sales and profit fueled by demand for information technology equipment to handle artificial intelligence work. Known for its PC business, Dell has attracted investor attention over the last year due to a spike in interest for its high-powered servers needed to run AI workloads. Again, Dell shares, they're up now by 31.8%. The other high-profile earnings report after the close of trading last night was Hewlett-Packard Enterprise. It reduced its outlook for sales growth and profit in the current fiscal year, citing lower demand for networking products and a crunch in computer chip availability. HPE said revenue will increase as much as 2%. Previously, HPE saw 2 to 4% annual growth. Today, HPE, its shares are higher by 2.2%. A stock we've been talking about right here on Bloomberg Business Week, the commercial real estate lender New York Community Bancorp. That stock we've been talking about right here on Bloomberg Business Week, the commercial real estate lender New York Community Bancorp. That stock is now plunging by 20.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
We've been seeing not just this year, but out of the October 2023 lows and truly out of the October 2022 lows, and you could also make the case out of the 2020 lows, it just seems unstoppable, but especially this part out of the October lows. I mean, it's really straight up for the S&P 500 and some of the other indexes. Interestingly, the Russell 2000.
I own a bank that shows me what I spend instantly. We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Some of the arguments that we heard last year, that it's only a couple groups of stocks, we're seeing the very different types of markets. When you look under the hood right now, you're seeing things like industrials, the healthcare, biotech, materials, right?
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, Shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile.
We're going to use an
ILT, or email me at mufc219@gmail.com.
About 2 decades ago.
So owned it, got rid of it, now maybe wants it again.
I think I tweeted this, what's old is new again.
That's the way it works. All right, we're going to check in with our team about that one. Also, bankers sick of commuting to New York are fueling a boom in a Tony Hamlet. That's outside New York City. I believe this is our most read story in the Bloomberg today.
Plus, what's coming up on Wall Street Week? We check in with David Weston a little later in our program.
Yeah, and then we've got an update on gender parity on the boards of publicly listed U.S. companies. Got a hint. We're not doing so well, everyone.
Are you surprised?
No.
Okay.
Been talking about this for years and years. We've also going to talk to the head of a company that wants to take you 100,000 feet above the earth in a balloon. It's all coming your way. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Once again, we're just about an hour away from the closing bell. And our most read story on the Bloomberg in the past 60 minutes, U.S. 2 years yields sliding on some comments by Federal Reserve Governor Christopher Waller. We're going to dig into that a little bit over the next couple of hours.
Hey, taking a look at the equity markets, Carol, we're close to session highs for the S&P 500 right now, up by more than 0.8%. The Dow Jones Industrial Average higher by 0.2%. One stock that is higher today is Spirit Aerosystems, popping on the news that Boeing could be taking back control of the troubled company. This company, one that it spun off just about 2 decades ago.
It's a great business case study or MBA school study, I feel like, or maybe,
it's still,
who knows?
Still being written, I think it's fair to say.
All right, well, that stock is up, as Tim said, popping up about 15%. Hey, we're going to get into bankers who are getting sick and tired of commuting to New York, and so they're fueling a boom in the postage stamp-sized mini Greenwich, excuse me. We're going to talk about what that town is.
Sick of their commute?
What are you saying?
Are the bankers the only ones?
We'll take this offline.
We'll see. We'll just see if this happens in other industries, unless it happens on a large scale to banks. That's what I'm wondering.
This one's fueling development, a development boom in a city outside of New York City. So we're going to talk about that. We're also going to get into what's coming up on Wall Street Week. That's at 6 p.m. Wall Street time on radio and TV. Of course, the host, David Weston, he's going to stop by with a little bit of a preview.
And how does this sound, Carol? Soar to 100,000 feet above the earth.
Got it.
In a capsule powered by a balloon.
I kind of love it.
All right.
Up, and
All
away.
you need, $125,000.
Easy peasy.
The company's already sold more than 1,000 tickets.
That's...
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
4.17%. The 2-year right now, 4.53%. What about the Federal Reserve and the rate environment? That question this morning for Laura Ram, who is chief economist at FS Investments. All right, we'll get to that a little later on. You can hear more of the conversation on the Surveillance podcast. You can catch the entire conversation there, or you can download it wherever you get your podcasts. S&P up 40, gain there of 0.8%. Dow Industrials up 73, up 0.2. NASDAQ up by 1.2%. Spot gold today up 40 points, gain there of 2%. And West Texas Intermediate crude up 2.1%, now 79.94 a barrel. Again, recapping, S&P up 40, up 0.8. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, The Rock. Thank you so much. Really appreciate it, Charlie. So we want to get to a story I think Charlie highlighted as well, and what's going on, Tim, with Spirit AeroSystems.
Yeah, shares soaring as much as 19% earlier after the Wall Street Journal first reported that Boeing is in discussions to acquire the Wichita, Kansas base supplier that has been at the center of numerous quality issues affecting 737 MAX jets.
A little bit of a history lesson. Tim and I have been talking about this. Spirit Aero spun out of Boeing back in 2005, sold to private equity investors, ending almost 80 years within the U.S. plane maker's fold, there for a long, long time. The move was part of Boeing's drive to become leaner and ultimately more profitable. A lot has been written about that focus over the last decade or so.
Yeah, so for more, let's bring in George Ferguson, Bloomberg Intelligence's senior aerospace, defense, and airlines analyst. He joins us from New Jersey. George, good to have you with us. Surprised to see this headline cross a little earlier today?
I was a little bit surprised. I mean, we kind of all knew it was out there that if Boeing felt like they couldn't get quality locked down at Spirit, that they could go in and buy it. I expected they would really try not to, because they probably prefer not to be managing Spirit's business as well as theirs. My guess is as they looked inside more, they got concerned about the ability to influence quality from the outside. And I think as the FAA handed them a report that said, "Hey, give us a plan for how you're going to improve the quality, reporting the quality of your manufacturing process," they said, "You know what? I think the time is probably right here. We probably need to bring this in-house."
Well, George, I think it's fair to say that critics would potentially argue that Boeing has had its own share of quality issues over the last few years, whether you're talking about the 737 program or the 787 Dreamliner program. So it's not necessarily, like, let's say this does happen. Is that some magic fix for Spirit?
It's not a magic fix for anybody, right? But at least it provides very clean lines of control and oversight. And I think that's honestly what Boeing needs here. But agreed, it's they both have their problems. I mean, you can imagine in the door plug problem, the door plug was supposedly on the fuselage, the latest I've heard, when it was taken to Seattle, taken to Renton, right, which is outside of Seattle. Mm-hmm. And then the plug was taken out due to quality issues, which presumably were Spirit's issues, and then not replaced correctly. So you get into situations like that. So who's at fault here, right? Had it not needed to be taken off, maybe we never would have had a problem. Is it Spirit's fault? Boeing engineers for sure should have put it back in the airplane correctly. So this cleans that whole thing up. It's not a fix. There's a long road to travel here, I think, for Boeing to improve their quality reporting system. But I think it does make it cleaner and easier.
All right, so cleaning out the supply chain. You know, it's funny, we've all been laughing a little bit, but just saying how much we love the supply chain function on the Bloomberg. And so we were looking at Spirit AeroSystems, all of its, big customers. Boeing, obviously, the big one, if you will. But Airbus is a pretty significant customer as well. So if this actually goes through, I mean, help me understand, were they supplying Airbus before when it was under the Boeing umbrella? Will they do it again? Like, how does that work?
No, so when Boeing spun them out, right, the main case sort of against investing in Spirit AeroSystems always was there's no diversity. And they've worked hard over the last couple of decades to diversify their book. And they went out and they sold their skills to Spirit AeroSystems. They're on defense programs like the 53K from Sikorsky, the helicopter, B-21 Raider from Northrop. So they were in the process of diversifying. My guess is that what happens now is at least the commercial programs, especially the Spirit program, the Airbus programs, they probably get hived out of this company because I can't see Airbus wanting Boeing to be a supplier on the A320 and the A350, two of their, their most important money-making programs.
What does that mean, George? Does that mean that that part of Spirit would be carved out from a potential deal?
That's my guess. And so my guess is if you were in rooms with bankers today, they would be busier than all get out, right? Trying to call customers that could plug these companies, these processes into their businesses. So they're probably helping to market it.
So they also supply Bombardier, Lockheed, Northrop Grumman, General Dynamics, as you mentioned. Airbus is the biggest competitor, of course. Bombardier, somewhat. Would they be able to keep the business that went to Lockheed, Northrop, and General Dynamics?
I mean, I think they could. The question will be, I think it'll be a couple of questions. It'll be how much could they get spinning that business out, right? I think Boeing will look at that as being a way to help finance part of the acquisition, although we think they could probably do this with stock, so maybe there's really no cash outlay anyways.
Okay.
But traditionally in the defense industry, there's always these teaming agreements, and so I don't think Lockheed, and I think Textron might be one. I don't think, and Northrop, I don't think they're going to care that much if Boeing is a supplier on their programs.
I also wonder about the future for the existing management, George, and I think about Dave Calhoun, the current Boeing CEO, who I know has been on a tour to fix things and has talked to employees. He's really been out there and rather emotional, certainly about the concerns that have happened so far. Emirates President Tim Clark said Boeing has one last shot at turning around the embattled manufacturer and suggested that fresh management may be needed as part of the overhaul. I don't know. Is the clock ticking for Dave Calhoun?
I think it is. It has been. Look, he came in to fix problems that were other people's problems, but I think you can argue he's been there long enough now, and that these problems have occurred on his watch, that now the problems are his. And I think there's a limited period of time that any CEO has when you're having issues of this magnitude. That they can survive, right? And so you have that question. The board always has the question: is this person appropriately overseeing and steering our business? That's a challenging question for Calhoun right now.
Yeah.
So 20 years ago, George, when Boeing was going through this financial shakeup to try to change the structure of their earnings, and they spun out Spirit to private equity. Did they also spin out other parts of the company that you think could be coming back potentially under a new, different Boeing?
I don't. There's nothing as material as Spirit that was spun out, but you do see companies. Boeing a couple of years ago, when there were problems with seat manufacturing, it was slowing down. The manufacturing of airplanes and shipping of them. They created a seat manufacturer. And so that's some place where they brought a capability in-house.
Okay.
And we've seen throughout the industry lately with the supply chain problems, and aerospace has had just major supply chain problems. We've seen a lot of companies buying suppliers and pulling them in-house. But I would expect that you will not see anything of this size anywhere else. This will be the biggest you'll probably see during this rough patch of supply chain problems.
All right. Well, as we said, Boeing has been in the news a lot already again this year, but continues to be so. George, thanks so much. Have a great weekend. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst, joining us right here. Do have some headlines crossing. This has to do with the Reddit IPO here, Tim.
Yeah, Reddit planning to IPO price range of $31 to 34 cents per share. That's according to the Wall Street Journal. That would give it a target up to a $6.5 billion valuation in the IPO. That, again, according to the Wall Street Journal.
And it also plans to give individual investors and the most loyal users of its message boards the chance to buy shares in the IPO. So certainly something that's on our radar, again, according to the Wall Street Journal. This is Bloomberg.
Good luck moving up, 'cause I'm moving out.
Well, Darien is a postage stamp of a little town. The richest in all of Connecticut's Gold Coast, it's packed densely with multi-million-dollar homes and is an unlikely spot for an office construction boom.
Not if you're moving out of New York and don't want to work there anymore. On a recent weekday morning, though, the rumble of excavators piling dirt high into mounds rang out across the downtown. Across it, they were making room for new shops, restaurants, and critically offices for finance workers who got a taste of life without the commute during the pandemic and realized they no longer want or need to make the hour-long train ride to Manhattan each day. So they're moving out of the city and said, I like it like being close to home, basically.
Those words courtesy of Naha Katan and Katya Porzakansky after a recent visit to Darien, which is undergoing quite a transformation right now. Naha Katan is Bloomberg News national desk reporter joining us from New York City right now. So Naha, tell us a little bit about Darien for people who potentially, have not visited this town. What's it known for? What's it like? Who lives there? Where do they work? What's Darien all about?
Sure. Well, I'll tell you what it was like on a recent trip that we took, Katya and I. We got off the Metro North about an hour from Manhattan. And it really is just the cutest, quaintest town. You walk 5 minutes in one direction and you have a cute coffee shop, 5 minutes in another direction, and there's Blue Mercury skincare that just cropped up there. And then in yet another direction, suddenly there are offices for financial firms like Janney Montgomery Scott and Crestwood Advisors, and more are coming with rebuilding of the downtown known as the Corbin District.
Kind of fascinating. First of all, okay, help me out here, because it is kind of a tony little town. We all kind of are aware of it if you live in the New York metro area. Are they happy about the development?
Most people we speak with say that they are. We talked to Uncle's Deli, the owner of this small wood siding little building that's kind of remained while everything around it has changed. So all of the beautiful new but actually old style New England buildings have gone up around it. It's seen everything change, and what the owner was telling us is they think it's being done with taste, but he's a little bit nervous about just so much change happening so quickly, and he has some funny quips about how Post Road, which is the main street, used to be so tiny you could shoot a gun down Post Road and you wouldn't hit anyone. He also says, well, I used to see the throughway through my window, now I see the Bank of America. So it's a bit of a conflicted feel for him. Well, but in general, good reaction.
Naha, all of this is happening at a time when companies based in New York City are trying to get people back to the office. And it's all happening at a time when people are saying to themselves, wait a second, we weren't going into the office during the pandemic. It's kind of a drag to get on the Metro North and go an hour into Grand Central. So we're looking for lifestyle differences. Talk to us a little bit about the context here of what's happening big picture that could actually lead to some big changes in these towns.
Right. So we all know that during the pandemic, a lot of people fled Manhattan, moved to places like Connecticut, and now we have huge commercial real estate, crisis issues, trying to get people back into the office in urban hubs. But in smaller towns, what we're seeing is, companies are realizing and developers are realizing that if they can attract people back in with brand new buildings or, highly amenitized, they call them in real estate language, buildings near gyms and near coffee shops, right near the train station, right where they live, then the hope is that they will bring them in. And you're seeing a lot of money go into that kind of concept.
Naha, Wall Street CEOs are calling and they're saying, no, we want you in the office. But it isn't, it's interesting, this contrast that is going on. Just got 30 seconds left here. Is it expanding? Is it not just Darien, but is it other communities that are also seeing an uptick in Connecticut where a lot of, to be fair, financial folks live rather, that maybe we're seeing it also boom, the boom going on in other towns? And just really quickly, if you could.
Sure. Westport and Fairfield are two other towns where we understand there's more companies sort of luring offices there. But then there's also Greenwich, of course, and Stanford. You can't leave those two out. Those are the big hubs for financial firms.
Really interesting story. So appreciate it. And I believe it is still the most read story on the Bloomberg, as it has been all day. Yep. So well done, and certainly getting a lot of attention. Naha Katan, thank you so much. Bloomberg News national desk reporter joining us in New York City. Hey, coming up, it may not shock you, we've still got a ways to go when it comes to gender parity on corporate boards. That story is next.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
The Nasdaq Composite Index up 180, up by 1.1%. Bonds climbed as disappointing factory data and a decline in consumer sentiment solidified bets on rate cuts, with traders also sifting through the latest remarks from a slew
UK and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did the all-in-one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
AI and Grok and that sort of stuff. But he said in a lawsuit filed Thursday that the company's close relationship with Microsoft has undermined its original mission of creating open source tech that wouldn't be subject to corporate priorities.
Right, exactly.
It's like the same thing that he was concerned about with DeepMind.
Correct.
Years ago when Google acquired DeepMind, and then he started OpenAI in response.
Yeah, it's interesting. Keep in mind Musk, owns X, formerly Twitter, raising money also for an AI venture called XAI that features its own competing chatbot, Grok.
Grok, that's right. I haven't used it.
No.
You have to pay for it, I think.
Yeah, not using it yet, everybody.
You're not grokking.
I'm not grokking. Here's what the lawsuit says. To this day, quote, to this day, OpenAI Inc.'s website continues to profess that its charter is to ensure that AGI benefits all of humanity. In reality, however, OpenAI Inc. has been transformed into a closed-source de facto subsidiary of the largest technology company in the world, Microsoft. Spokespeople for OpenAI, Musk, and Microsoft did not respond to requests for comment. Our team certainly reached out. But it just shows kind of an escalation in one of the highest profile clashes in the emerging field of AI. So you're talking about two very prominent players, Elon Musk, and then the team over at OpenAI specifically.
The concern here is about artificial general intelligence, also known as AGI. This is what we were talking about with Doug Krisner a few days ago, Carol.
Yep.
I think we called it the holy grail of AI. It's the idea, of course, that there are people, or computers rather, that could be as smart as an average human. So it's totally different from the LLMs that we're familiar with, like the chat GPTs. This is like the computers becoming as smart as people. And there's a Terminator thing here with Elon Musk. Like he's worried about that.
Well, here's the deal. He's suing for breach of contract, breach of fiduciary duty, claims of unfair business practices, among other grievances. He's bringing this suit in the capacity of a donor to the nonprofit parent organization as recently as 2019, seeking to force OpenAI to stop benefiting Microsoft and Altman personally. We have talked about the structure of OpenAI. It's a little different, and so I get to some of it. But he is asking for an order to compel OpenAI to make all of its research and technology open to the public, and for Altman to be required to give up any money he has earned as a result of the practices alleged to be unlawful. Musk also seeking unspecified damages, which the lawsuit says he would contribute to a charity if any compensation is won. So he's doesn't necessarily sound like he's looking for personal gain here.
Well, there is also some confusion and disagreement, I'd say more disagreement than confusion, over where we are as a society with artificial general intelligence. So since introducing ChatGPT and GPT-4, that's the LLM that powers the chatbot, OpenAI has set off a wave of AI adoption in businesses around the world. Microsoft has been one of the most aggressive in incorporating the tech into its cloud and enterprise services, and Elon Musk contends that OpenAI's GPT-4 can actually be viewed as an AGI system, whereas Sam Altman over at OpenAI expects AGI to be reached in the next 4 or 5 years. That's according to December Time magazine profile of him.
Welcome to the world of generative AI, next level AI. It's just kind of interesting in terms of some of the players and so on and so forth. So anyway, great read, interesting. We'll see where this ultimately goes. It is among our most read on the Bloomberg terminal. And speaking of most read and stories catching our attention, just one that crossed moments ago about Reddit, targeting a valuation of up to $6.5 billion in its highly anticipated IPO, far less than the social media company was worth just a few years ago. We've got a great voice to talk to us about some of the details that we just got moments ago.
Bloomberg News equities reporter Bailey Lipschultz joining us now. Bailey, good to have you with us. As Carol mentioned, the Redhead crossing just in the last half hour or so. Reddit planning to IPO, price range at $31 to $34 per share, according to the Journal, up to $6.5 billion in its valuation. What are your thoughts on this? Because as Carol mentioned, a difference than other figures we've heard.
Yeah, so we had reported a few months ago that they were being guided to target at least $5 billion. So this obviously is a noticeable tick higher than that. When I talk to people who operate in the secondary market where they're facilitating trades of still private companies, they actually thought that the $5 to $5.5 billion range was a bit higher than they were really expecting some of their clients to be willing to put money to work. We've seen an IPO market very much still working through its recovery with a number of the bigger deals this year pricing below range and stumbling out of the gates. So when you compare that to the $10 billion valuation it notched back in August 2021 in a different environment, it does seem higher than we had been hearing, but I guess not astronomically higher, if you will.
Right, and down from the $10 billion valuation that it notched in its most recent fundraising round back in August of 2021, as you talk about. I mean, listen, it's been 2 years on the sidelines, right? I mean, getting to this point, though, is progress.
Yeah, it certainly seems that way. It definitely has been one of the names that was mentioned in 2020 and 2021. Obviously, the market really shut down in 2022 and 2023. The two companies that the fundamental investors I talk to will compare this company to are Snapchat and Pinterest. Snapchat from the end of September 2021 down 85%. Pinterest over that same stretch down 28%. So when you put some of those expectations and some of the details that we saw when Reddit formally flipped their S1 filing public, it does seem like you would have to reset the bar for what a valuation could look like. They still aren't on an annual basis profitable, which is something analysts and investors really want to see. Though they did try to play up AI, which, as everyone knows, is topic of the year.
No, nobody's talking about it.
Fair. I think that's a fair assessment. Hey, I want to ask you about something that Matt Levine wrote about last month, and it's the idea that Reddit's IPO. Well, his title, I love it. Reddit's IPO is for Redditors. It's like a play on Reddit's slogan.
It is for Redditors.
So it is. And what we did learn is that they're going to actually give a big chunk of its IPO shares to their users. What do we know about that?
Yeah, so Reddit has been courting some of those users who are either moderators or high in karma points, which is really just slang for people who actively use Reddit on a regular basis. We've seen those emails being sent out basically laying out that if you are being tapped to potentially participate in the IPO, if you link your Fidelity or Robinhood account, you can try to get some form of an allocation. I've talked to folks on both sides of the argument. Some people look at it as a positive, Reddit really embracing its users, wanting to maybe democratize itself similar to Robinhood. But we have seen this play out poorly with other companies. Robinhood is one of those names that did sell and carve out an allocation to users. And that company, outside of an initial pop, has done quite poorly. When I spoke to Greg Martin, who works at Rainmaker Securities, they operate a secondary shares platform. He basically said, in his view, he took the desire of Reddit to offer shares to users as a negative because it'll likely mean that you're not actually getting shares in the hedge funds and the long onlys. But it is quite a divisive topic.
Bailey, still unprofitable though, right? 20 seconds here?
Still improbable, and that's the big thing. Maybe they can use AI to turn that corner, and they do seem to be trending in the right direction. But that is one thing that does matter when you're looking at tech companies. It has been a big point of pushback for the investors I've talked to.
Is AI just going to solve everything? I mean, come on.
Solve?
Solve? You're saying it's already has?
Elon Musk is worried about it.
Oh my God, Bailey Lipschultz, thank you so much though for laying it out, because Torsten Slok saying one of the upsides why he thinks the Fed doesn't have to necessarily do anything this year with rates is that M&A market, IPO market, all coming back. What?
I'm just thinking Reddit's
Are you
good.
an AI robot?
No.
What happened there?
Bailey's a new homeowner, and I'm wondering if he uses Reddit for home improvement, because it's a good place to find home improvement tips. Hey,
Coming
let's
up
go
in
to
our next
Washington.
block.
I want to go to Washington, D.C. now for a check the latest world and national news with Scott Carr in the Bloomberg 99.1 Newsroom in D.C. Hey, Scott.
Hey there, Tim. Thank you. Saying today his administration will pull out every stop to get humanitarian aid into Gaza. President Biden has announced the U.S. will join with other nations in airdropping aid kits into the region containing food in particular.
Possibility of a Marine corridor to deliver large amounts of humanitarian assistance. In addition to expanding deliveries by land, as I said, we're going to insist that Israel facilitate more trucks and more routes to get more and more people the help they need.
Conditions on the ground in Gaza are reportedly becoming increasingly worse as the Israeli-Hamas war continues. The decision marks a shift and acknowledges that current efforts to get humanitarian aid into Gaza have fallen short in addressing the humanitarian crisis there. Donald Trump is in a Florida courtroom today as part of his classified document handling case. The judge is considering when the case should go to trial. Prosecutors have asked that it begin July 8th, while Trump's attorneys seek to push proceedings until after this year's presidential election. Meanwhile, in Georgia, closing arguments will take place in a bid by Trump and his co-defendant to remove Fulton County DA Fani Willis from the case she brought against the former president for alleged conflicts of interest. A lawsuit filed against Amazon is claiming the online retail giant has been using deceptive language to trick its users into signing up for subscriptions to its Prime service, and then making it difficult to cancel a subscription through the use of alleged manipulative or deceptive language and a labyrinth-like cancellation process. The complaint is led by investor D.M. Cohen and is filed in Delaware's Chancery Court. Amazon has not yet responded to requests for comment. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott.
own Bloomberg World headquarters, I'm Charlie Pella. 340 on Wall Street, stocks pushing higher, S&P at a record. Right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green today with the Dow currently up 87 points. S&Ps are higher by 39, while NASDAQ climbs by 1.1%. The U.S. 10-year yield falls to 4.18%. Gold is up 40. Oil trading in the green, and Bitcoin is higher by 2%. Among the main 11 S&P sectors, leaders were tech and energy. Only utilities and financials were in the red. And leaders to the upside in the Dow, Salesforce and Amgen, while Boeing and Nike led to the downside. After earnings, Dell Technologies rose 30% to a record. And in deal news, Boeing is in talks to buy 737 supplier Spirit Aerosystems. Wrapping things up, NYCB fell 26% to its lowest level since 1996 after weakness on its loan oversight report. Live from the first breaking news desk, on Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, TikTok, just about 18 minutes left in today's trading session. Charlie breaking down the trade for you, just rolling over in terms of the equity rally, but we're up about 1% still on the NASDAQ. Big reason why, Tim, we talked about it earlier, Fed Governor Mr. Waller, talking about maybe the Fed in terms of buying, I guess, on the shorter end of the yield curve here, or shorter term treasuries. We've seen yields come down quite a bit.
So are people not paying attention to what Torsten Slok has to say?
No, because he's saying the Fed doesn't have to cut rates, and we're seeing lower rates today.
I know, that's what I'm saying.
And so they're not listening.
That's what I'm saying, yeah.
Sorry, I do listen to you.
Sometimes.
I'm in a little bit of a Friday mode. Can you tell?
Hey, let's see what Dave Harden has to say about all this. It's time for Drive to the Close. For that, we go to Dave Harden, who's CIO at Summit Global Investments. He joins us from Utah. Dave, good to have you with us. How's the skiing out there in Utah right now? You get any of the snow that California's set to get this weekend?
Absolutely, and we're looking forward to having you out. But the snow looks great, and we're enjoying it, that's for sure.
That's good to hear.
What are people talking about more, the snow or what the Fed's going to do?
Well, that's a great question. In the office, the Feds. Well, maybe not. Behind my back, maybe the snow still.
All right. What is the important conversation? Because we know folks say, listen, we're longer term for investors, blah, blah, blah. We don't really care about the day-to-day gyrations and swings. But having said that, you got to kind of sometimes tinker around with portfolios. So what is the smart conversation around the financial markets and investing right now in a market that has really bounced back, certainly on the equity side, in a strong way?
Well, I think there's three conversations. One is centered around risk. The market, because we don't really know exactly what the Fed's going to do besides support everything, the reality is that that's generating a lot of the comments around risk. And the better you understand the risks in your portfolio, I think the better your portfolio will do for you. So I think understanding those risks and diving into those risks is probably paramount. Behind that, though, we have AI and technology, right? NVIDIA stole the show, if you will, with their earnings. They've kind of reignited that rally, and we're seeing it today, up, like you said, about 1% on the NASDAQ. The last one there with the three would be the Fed itself. Everybody was kind of thinking maybe the Fed's taken out of the driver's seat, and the reality is clearly they're not, and they don't want to give it up. They want to stay in that driver's seat. They're looking at the financial conditions, and they really have this ability to cut rates if they need to, cut rates with weakness. And like you said today, looks like they've done that without even cutting rates. So the Fed's really in the driver's seat. And those are the three discussions I think that are most important right now.
Okay, so talk a little bit about what the risks are that are out there, because you said you need to understand the risks, but what are some of those risks?
Well, for example, let's take utilities today. And I know it's just one day, and a day doesn't make a market, right? It doesn't make a portfolio over time. But utilities today are really, really suffering. So people are looking at utilities and saying, hey, I want to invest in utilities. I want to have safety in my portfolio. Reality is that over the last 2 years, utilities have not brought in the safety that people maybe in the past have experienced. So you have to look beyond the kind of the notion that the standard that it's been in the past. What are the risks in your portfolio? What are the yield risks? Meaning, how does inflation impact your portfolio? And right now, it's significantly impacting utilities and financials. We're seeing it in both those sectors. So understanding specifically, another thing that people don't look at is company-specific risk. What's going on with the managers and with the CEO and the C-level suite of your portfolio, or what's happening behind the business risk of your portfolio. These things, I think, need to be explored within a portfolio management team, and that's one of the things we do here at Summit Global Investments.
I just want to make sure I understand you right. We are seeing utilities, the worst performers in the S&P 500 today, but they're down possibly because of what's going on just with Xcel Energy and the risks around the worst Texas wildfire in history, and questions that arose yesterday in a filing from a lawyer that spread concern about whether or not Xcel could be held liable for that. So are you saying utilities as a whole, or because we need to, do we need to remove Xcel's performance yesterday and today from that?
I think you do need to remove that individually, but utilities tend to have this issue, right? We had Southern Cal doing the same thing. We've had some of these, not Southern Cal, excuse me. I take that back to all the Southern Cal shareholders. But we've seen this.
You're talking PG&E, right?
Wildfires. Yes, exactly. We've seen this with utilities and wildfires before, and the risk around them. But the concept's the same. And so, yeah, remove that performance, but utility as a whole has still lagged considerably from where the safety has been in the past. So I think that you're absolutely right. Every company needs to be evaluated, and a company like Xcel and the chance that it may be liable for this large fire, it doesn't have as much legal damage as it looks like to some of the other fires with deaths and destruction, but it still has plenty, and so there's a lot of risk there.
Hey, one thing I want to ask you, because we kicked off our broadcast at 2 p.m. Wall Street time with Apollo Management Chief Economist Torsten Slok. It's one of our most read stories on the Bloomberg today. He basically says the Fed doesn't need to cut rates in 2024. He said because of a rise in underlying inflation, it'll prevent the Fed from doing so. And he pointed to some of the growth that we continue to see in the economy. What is your Fed bet, and what investment most is that impacting?
So this is the tug of war, right? Because if the Fed doesn't cut, how does that affect the technology and the AI and et cetera? I think people want the Fed to cut from a standpoint of, I want my portfolio to go up. And they think that if the Fed cuts rates, that their portfolio will rise. That's the kind of notion out there on the street. I think that it's going to be higher rates for longer. I am in the ballpark that some of the inflation numbers, not all of them, are a lot stickier, especially with employment, a lot stickier than people really realize. So I don't see the inflation coming down as quickly as people believe. The issue really falls not in necessarily will the Fed cut rates or not. I think another thing is, will they step in if there's any weakness? And I think the market also believes that, you know what, even if rates aren't cut, if there's any real weakness in the economy, the Fed will stop. The Fed will step in. So that's really where this backstop, it's kind of the old notion of don't fight the Fed. That's still at play right now.
Are you seeing any of that weakness out there right now?
Oh, sure. Absolutely. I think that you always got to be cautious that you're a little bit too optimistic. I always say to people, check your ego at the door a little bit. Don't get over your skis. I think you always need to take profits where you have some. And there's some really, really good returns right now in a lot of the AI and technology sectors. And I wouldn't be surprised at all if you see over the next couple of weeks a little bit of a reprieve there a little bit. But, over the next quarter, I still think that tech wins out for sure. If you had a bet between tech and utilities, I'd probably go with tech.
All right, going to leave it there. Hey, listen, thank you so much. Dave, have a good weekend. Dave Harden, he's CIO of Summit Global Investments out there in Utah. Just got about 11 minutes left to go in this trading session, so getting ready to wrap up the day, the week. You've got the S&P up about 41 points, the NASDAQ beating the major equity averages on a percentage basis. It's up 1.1%, 181-point gain, although I did not check out small caps, which sometimes...
There's still time, Carol. You can do it before the close.
I'm trying.
You got it. In the meantime...
Wait. Up 0.9%.
Okay.
0.9%.
So underperforming the NASDAQ, but outperforming the S&P 500.
Pressure,
You
man.
got it. You can do it.
Fingers doing the walking on the Bloomberg keyboard. This is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are keeping an eye on shares of Spirit Aerosystems and Boeing. Spirit right now up 13.5%. Boeing down 1.7%. Boeing in discussions to acquire Spirit Aerosystems Holdings, a move that would reclaim control of its struggling former aerostructures unit and the main supplier at the center of numerous quality issues affecting 737 MAX jets. Now, sources have told Bloomberg that the Wichita, Kansas-based supplier hired bankers to explore strategic options and has held preliminary talks with Boeing. Again, shares of Spirit Aerosystems up now by 13.3%. Agricultural trader Archer Daniels Midland has delayed the publication of its annual report. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, ADM is warning it anticipates reporting a material weakness in its internal financial reporting practices. This is the first update the company has given since the agricultural trader stunned investors in the commodities trading world back in January with the announcement it was placing Chief Financial Officer Vikram Luthar on administrative leave pending an internal probe. Last month, sources tell us the U.S. Attorney's Office in Manhattan had launched an investigation into accounting practices